Hey guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Welcome to Stock Sniper Trading. Ready to transform your trading? Discover the perfect Stock Sniper trading plan for you. At Stock Sniper Trading, we execute trades in real time on live sessions with proven strategies. Let's take you through our membership plans. Live trading and Scalper Pro signals. Our monthly plan starts from $49.99 USD plus tax. Our 3-month plan starts from $149.99 USD plus tax. Our yearly plan starts from $549.99 USD plus tax. Our lifetime plan starts from $999.99 USD plus tax. Stock Sniper Trading signals. SST monthly signals at $29.99 USD plus tax. SST 3-month signals at $89.99 USD plus tax. SST yearly signals at $249.99 USD plus tax. For more details on our one-on-one trading and consulting and subscription plans, kindly visit stocksnipertrading.com.
Recording in progress.
Hey everyone, welcome to Stock Sniper Trading. My name is Ron, my partner is Dave. Thank you guys for joining. It's 9 p.m. Eastern. This is our late night Tokyo session. Thank you guys for joining. Today's date is Wednesday, May 29. We're almost at the end of the week, so keep an eye on that higher time frame monthly candle on any security you're trading. Let's see how they close out the month and how next week begins with the new monthly. So thank you guys for joining. I appreciate everyone. Thank you everyone on Zoom. Thank you guys for joining. We just wrapped up our live Q&A session. Some fantastic questions, guys. I had a great time. We could have gone longer, but we needed to take a little bit of a break so that we could get into this live Tokyo session. So keep the questions coming, guys. It was a fantastic session. We'll do more of those Q&As. I hope you guys enjoyed it. For those that were on it, it is recorded. We will get those uploaded on the website once we get everything settled with the website the way how we want to do the new system going forward. But fantastic call, guys. And everyone on YouTube, thank you guys for all joining. I appreciate all of you guys as well. Welcome. Tony Gold, welcome. Arabs Trading Academy, welcome. Habibi, Kifek, I hope you're doing good. Welcome everyone else. Terrence, morning. RPG, short full margin. I hope it's on US30. I hope you shorted US30. We're going to talk about the big drop on Dow Jones today. What happened in the markets? Anyone want to take a wild guess? What happened with Dow Jones today? Anybody? Like, we've been working our way this narrative. Why are we in long 4-hour sell positions? Why are we looking at sells? What happened? Salesforce, you got it. So Salesforce, the ticker is CRM. We'll talk about it. They really took a dive, and that kind of dropped Dow Jones. That's what I was saying yesterday, guys. I'm following that. That's why from Monday night when we started our call for the higher time frame analysis, we went through the earnings Monday, Tuesday, Wednesday, Thursday, Friday. We figured out Wednesday after hours was the big day for CRM, and look at how everything played out perfectly. Even broke below 38,500, that green box of demands right over here. So we're going to talk about all of these things, but let's just get started with how's everybody doing? How's everyone's day? Last night's call was fantastic. So there was a lot of good questions. Our cheat was asking about how to get started with a trading journal. Like what to put down. So we talked about that. We had other traders talking about over trading, maybe taking 10 trades is too much, to reduce that down to 5. And then so just like these things, guys, we're continuing to learn on a daily basis, helping each other out and seeing if it works. How can we fix things? How can we improve? Always, every single day. Are we improving the day before our trading? And that's all we can do as traders, is just constantly improve from our mistakes, and then start to clean up your mistakes, and then you're going to start to have good days in the market, more exciting days where you're getting more profitable in these markets. Okay, so we will these charts have not changed since Monday night, since we started our first. I've left them the same. We can tidy them up, we can clean them up. Like over here when we started, I can remove this buy signal up here. I don't think we're all the way down here on Dow Jones, so that's out of the question. But that's how the week started. What we were consolidating in this box. If green volume closed above here, we could have been pushing up here, but you see how it came up there and got rejected, and in the big bearish candle, 4-hour candle closed below our zone and continuing to push down and continuing. Then we had this big drop in the market. That was CRM, Salesforce, so we'll talk all about that. Okay. So thank you guys for joining. Red Lady, thank you. I appreciate you. CL, thank you for joining. I appreciate all of you guys. So let's get into this. Hearst Horns, thank you for joining. I appreciate you as well. Everybody, awesome. Thank you guys for joining. Guys, I had to switch the contract over here on gold. So on the right of my chart, this is Bookmap. This is live depth of market. Currently, this is the futures market. This is on gold. I had to change the contract. So before I had it on GC. Over here, if you don't know how to look for contracts, right over here, go to your help. Click on this, symbols, and then it will bring up Bookmap's kind of contracts over here in the future. So I had it on this contract. I had it on M. So M is kind of expired. The June contract, it's May 29th. So June is expiring. I looked up the N contract. There was nothing. And then you see I'm in the August contract. See how it's Q over here on Bookmap, GCQ4. So GC is the ticker for gold in the futures. Q stands, I'm looking now, the futures contract in August. This is the August contracts. This is the current order book for August. And the 4 represents the year, 2024. And then COMEX, you guys are familiar with COMEX, and then we're getting all of the data from Rhythmic. Okay, so if you guys are interested on how to find the current contracts, this is how you find it. The month, these are the codes for the specific month, okay? And then the year, and then if you need it, like over here, this is how you can find out. If we're looking at the E-mini, Dow Futures, or the Dow Futures Micros, you can see CBOT is where it's coming from, CME Exchange, and then you just fill in the blanks. You just fill in the year and the codes, and then you can find anything you need in the futures over here. I'm not sure if any of you guys have used this type of information over here, but that's how you find the contracts. Okay, so that's off of Bookmap. So what we're going to do is we're going to get started with Forex Factory. Let's just update everything over here. We'll talk about today's news. We'll talk about tomorrow's news, what to expect, and find out those volatility, where the volatility is, where those high impact folders are, and that's where we'll look for some trades after the news is released, and everything. You guys know the drill. If you're trading into high volatility news, please don't be over leveraging, guys, or else you might get clapped and you might incur a big loss when you don't need to. So that's all knowing when and where the news will be released. Okay, so let's start off with Wednesday. We had some news come out in Europe, in Germany over here. Okay, so if you were trading anything to do in London, in Europe, hopefully you're following your folders over here to the specific currency you're trading or the specific security you're trading over here. Especially if you're trading DAX, that's the German exchange, like how we have the American exchanges. We have NASDAQ, we got S&P, we got Dow. German exchange is DAX. So it used to be called German 30. They changed it to German 40. They added 10 securities. But if you're looking for the abbreviation DAX, DAX, that's a German exchange. It's good to trade in the London markets when you do have that volume and you do have news coming out of Germany and Europe. And then moving into us today, into New York. You had Richmond Manufacturing Index. You had some FOMC members speaking. You had the beige book. Okay, we were talking about this all week. The beige book. What is it? Okay, so snipers in the Zoom. We do have the financial juice thread that's constantly going on a 24-hour basis. There's probably some news that was already dropped right now. So I'll just show you quickly where it is. So let's go to our Discord over here. Let's go to our financial juice right here. It's right under the Zoom live sessions, financial juice. I'm on it right here. So you can see I'm starting to get right now, like an hour ago, I'm starting to get some news coming out of Japan. So foreign investment, Japanese stocks, actual, all of this. But if we want to read the beige book, scroll up to what time it was released. This is live, so it does drop it live when it does happen. And then if you don't know what it is or want to read a little bit about it, let's get to where it is. See, there's a lot of news throughout the day all over the world. Do we have the beige book here? Maybe I gotta scroll too far. Maybe I can't find it here. But I promise you it was here. It was released unless I skipped it. I don't want to spend too much time looking at this. No, I'm on the wrong date here. Did anybody see it? Did I scroll past it? Let's see here. I'm just searching for it, guys. I thought they released it here. I don't see it. I could be wrong. Oh, here it is. Okay, here it is. See, 2:04 p.m. Okay, so just a couple minutes after the release, the Fed beige book. So now it just gives a little bit of a summary of what it is. National economic activity continued to expand from early April to mid-May. However, conditions varied across industries and districts. Overall outlooks grew somewhat more pessimistic amid reports of rising uncertainty and greater downside risks. Prices increased at a modest pace over the reporting period. If you need any links from Federal Reserve and monetary policy, it's good to read up on these things. As we're going into the next couple of weeks, we're going to go into our actual FOMC with Powell. Are they going to keep rates the same? Are they going to decrease? Are they going to increase? What are they saying? What is the narrative? What are they working on? Employment rose at a slight pace overall. 8 districts reported negligible to modest job gains, and the remaining 4 districts reported no changes in employment. Retail sales indicate lower discretionary spending. So all of these things, when we put these things together, maybe we can kind of conclude as to what the Fed might do come interest rate time. That comes out of the beige book. That's if someone was wondering what that was. You see how there's no previous, there's no forecast. There's no actual number on the beige book. It's just some summary of what is going on in there. And if you wanted to read exactly what the beige book is, you can look more into that by clicking on this folder, and then it will tell you a little bit more about what it exactly is. Okay, and then if you want the related articles, they're right here. Ugly beige book, the job gains, lower discretion. You can click on it, and then there's the article for you to read a little bit about. Some of you guys not worried about this, no big deal, but others who are interested in this stuff, it may help you understand the more macro side of the markets and how things move on a bigger scale. And then what did we have? We had some members speaking throughout the day, and then we ended Wednesday. So the big news was more the earnings after hours Salesforce we're going to get into, we'll talk about. Let's just see what tomorrow is. So tomorrow is Thursday. It's a busier day in the markets. We're near the end of, so let's just put everything together. Thursday, May 30th, tomorrow we're near the end of the week. We're near the end of the month. Contracts will be expiring. Fridays will be expiring. Monthly contracts will be expiring. That has a huge impact in the overall market. So if you're an option trader, a lot of options, weeklies and monthlies, will be expiring at the end of the week. So that might play a role in the liquidity in the market and how things will shape up and develop for opening next week. So we got to take all of these things into consideration. So you might need to, if you're not used to some end of the week, end of the month volatility, maybe start to consider reducing your risk. And this is how you can already start risk management. Okay, so you got to look at all of these things and put this together. And then maybe once the new month starts, the new fresh month, new fresh week, they release the news, then we can start trading again with our normal sizing. But just if you know ahead of time that to expect something at the end of the week, end of the month, then maybe start to think about how much you're going to willing to risk or reduce your risk. So what do we have tomorrow? We've got some Swiss news coming out pre-London, 2 a.m. We got London market open 3 a.m. We got some Spanish flash CPI year over year over here. Some European news coming out of Italy, Spain, Switzerland. We've got unemployment rate, European unemployment rate at 5 a.m. Italian 10-year bond auction right over here, tentative. It doesn't release the time, but expect it to come out anytime during post-London. We have the more time frames that I like to trade, and what I watch is more the North American markets right over here at 8:30 a.m. You can see it's going to be busy at 8:30. We've got some Canadian and US news. There's some low impact, there's medium impact to high impact. So a little bit of everything. Also incorporate COMEX market opening up at 8:20 a.m. Eastern. Then they drop all this news 10 minutes later. Which folders, what should we be looking at? I tend to focus on the USD as opposed to the Canadian, unless we're trading the Canadian dollar, or I don't really trade the Canadian dollar, but I follow exactly what it's doing with the US. But I'm more my attention is more into the US over here. So we've got a red folder, preliminary GDP Q over Q, so quarter over quarter, prelim GDP. Look at what they're already forecasting. From the previous quarter, 1.6% for GDP, preliminary, and their forecast is 0.4% decrease to 1.2%. So we don't want to see GDP in any country, wherever you live around the world. You don't want your home nation's GDP decreasing. That's not good for trade, and that's not good for your local economy. You want to always see your GDP increasing. Like if you own a business, you want to see growth and revenue of your business. You don't ever want to see revenue decreasing. But GDP is your gross domestic product. It's what are you producing and what are you selling to other nations around the world. We don't want to see a decrease, but we have. Facts speak. We've seen a decrease, a shrinkage in GDP in USA for years now. There's been shrinking. So they're also forecasting a drop. We'll see what the actual number is. I hope it's not below 1.2%. If it is, that's going to really affect the US dollar and will really affect any securities that you're trading. Will affect the markets and everything. So we'll see what this is. That's why it's a red folder. It's high impact. We also have the weekly unemployment claims coming out tomorrow morning, same time. So from last week, we had 215,000 individuals apply for unemployment. They're forecasting 218,000. That means 3,000 more individuals they're forecasting are in that unemployment line looking for work. I know it might be insignificant number, 3,000 compared to how many, but unemployment is not good. And then we'll see the actual number. The actual number will dictate how the markets move. So we'll see in here. If you see, let's say the number is 210,000 is the actual number. The number you will see in here, now ask yourself, if it's 210, start right now, thinking about if the number comes out lower, is that good for the US dollar? Is it bad for the US dollar? What does it mean? If it comes out here, 210, it's below their forecast. It's below the previous week. 210 means that there's less individuals applying for unemployment. That means that's good. That's good. We have more individuals finding work, working week over week. That will affect the dollar right away when it's trading. So you might see 210 come in and it might be green. I know that the number 210 is smaller than 218, and your mind thinks, why isn't it red when you see a smaller number? But you got to think of what is it measuring. So it's measuring unemployment claims. The smaller the number, the better, the greener the number will be, and that might boost the US dollar. So we'll see tomorrow's unemployment claims. This unemployment can affect interest rates and everything. So it gives us a little snapshot of how the economy is doing labor-wise. So it is important. That's why it is also a red folder here. We've got our prelim GDP price index quarter over quarter. So there's a lot to do. These are big. Gross domestic product are big in the markets around the world. Goods trade balance, prelim wholesale inventories month over month. So there's a stack of news tomorrow morning at 8:30. Then we move into Wall Street 9:30, then 10 a.m. USD. See another red folder at 10 a.m. Pending home sales. These pending home sales and new home sales were down last month. Think about it. Pending home sales month over month. Previous 3.4%. Look at where they're forecasting, a negative 1%. What do you think? Just common sense. Do you think there's a lot of individuals looking to buy homes right now with the state of the economy, with the state of interest rates? You might have to have a larger down payment to secure a loan. All of those things. What do you think? And then let's see how the market, what the actual number is here. And then if you do anything with oil and energy, you got natural gas storage and crude oil inventories at 10:30 and 11 a.m. Eastern, right after Wall Street. And then we got some speakers, and then we move into our Tokyo, Sydney, Australia session. Okay, so tomorrow what I would do is I would focus on 8:30 a.m. Eastern, moving into Wall Street. Whether you look for a trade, take a trade, or don't take a trade, make sure you're looking at the news, and then maybe allow all of the volatility to happen and then look for trades after, unless you have confidence to trade in this period and you know how much you're willing to risk in here, because it could get choppy, it could get volatile. So just prepare yourself. And then we'll talk about Friday. We'll talk about how Friday is on tomorrow's call. Okay. So earnings. Today was a big day in earnings. Who was it? The big name CRM. Some of you guys have never heard of this. That's okay. I never when I was learning, I never heard of a lot of these corporations. But once I started to figure out what I want to trade, then like I trade Dow Jones, so I'm always looking at Salesforce every quarter when they do report, because they are significant holding in the Dow Jones. So you can see the significant drop that they had today, this afternoon. So when did they release? Right when Wall Street closed, right to the minute, 4 p.m. they released their news. When you're looking at these numbers, sometimes these numbers don't add up. Like their earnings per share is up. It's up 6 cents per share to $2.44. Their revenue was a disappointment, but not by much. Like, is this going to really drop a security 20% because they missed it by what their estimate was, 9.14 billion, and they only made 9.13 billion? Like, we're talking, that could be very insignificant numbers. So what is it? Why did it cause this drop? So sometimes you got to listen to also the conference call. You got to listen to the guidance. You got to listen to the earnings after the call, not just the numbers, and kind of dive into what is said in here, and maybe that will give you more of an analysis. So I'm just reading over some quick news here. So look in the after hours. It dropped over 16%. Okay, it was trading today at around $271, $72 per share, and it dropped down to 228 right now, 226. That's a 15 to 20% drop. That's very significant. Okay, so that's a huge drop for any security. So what caused that? Now, if you just read some related news, I'm just looking here. Dow drops 400 plus points today. HP right over here, Hewlett Packard, was also at 415. So they also, CEO talks about AI PCs and things like that. Maybe that had a little drop in the markets, tech sector and things like that. But when we keep reading, Salesforce drops on first ever single digit sales growth outlook. Okay, so this is first time investors are seeing this. Let me read that again. Salesforce drops on first ever single digit sales growth outlook. So that's not really good. If investors have always been accustomed to double digit sales growth, and now the first ever forecast of a single digit, Is that good or bad? Does that give you confidence? So what's going on? Why is now all of a sudden, why are we in single digit revenue? So that might raise an alarm, and maybe some shareholders are getting scared of that, maybe starting to sell some of their position. Just things like that, just reading up on it. And then if you want to read more into that article, like click on the article, read more on Salesforce. Just reading real quick from Bloomberg, Salesforce Inc. dropped more than 16% in extended trading after the software maker said sales growth in the current quarter will stall to the slowest in its history, fueling concerns about the company's ability to stay relevant as the industry shifts toward artificial intelligence tools. So maybe Salesforce is not keeping up with AI, and they've lost a lot of shareholder value. So then it's just numbers, the revenues. Investors have been concerned about Salesforce's sliding sales growth over the past year as the company turned its attention to improving profit management, has touted the potential for AI, artificial intelligence oriented software and features to boost revenue. The company has also increased buybacks and initiated a dividend to keep Wall Street happy. So they're trying everything in their power to keep Wall Street happy. They've added features to boost their revenue. They've increased buybacks where they are buying back their outstanding float on the market to kind of keep support for the stock and keep buying. They've initiated a dividend to keep investors happy, and you see that that's what was also on top of all of this. It doesn't look good, so maybe that single digit revenue for the first time in its history, that's raising an alarm. No matter how much of a dividend or they're buying back their stock, that you still got to understand that maybe some investors are wondering what's next. What about the next quarter? What about the next quarter? Are we going to decrease in sales? Maybe it's a good time to get out now of your long position when we're close to all-time highs, and secure some profit, just like how you and I trade. Maybe investors are securing a little bit of profit. Maybe they're waiting for it to dip down to a level, and then they can buy back at cheaper, at a discount. And maybe Salesforce will start to climb its way back up. But that's how long-term trading works. That's how scalping works. You can sell high, buy back low, and then sell it back high. So we got to see where's Salesforce, where's its bottom, where's it going to find some support. Maybe we'll find a little bit tomorrow, maybe Friday, maybe going into next week. Maybe it continues selling. We don't know. We'll figure that out this week. So does any of this interest you guys? Because I spent time reading this. For some of you guys, maybe you don't care about this, but if you trade the bigger index securities like Dow Jones, for example, then if you're wondering why did Dow drop so much today, this could have been one of the biggest the securities that kind of pushed it down today. So I'm not saying that this was what caused Dow to completely drop, but if you put the pieces of the puzzle together and you look at 4 p.m. and you see how far down it dropped, it could have been because of this. Okay, so I've been telling you guys since Monday night, since we started right after Memorial Day when the U.S. banks were closed, we did our higher time frame analysis, and I told you guys keep an eye on Salesforce. So congratulations to you guys that we're in sells in US30. Congratulations to you guys that maybe looked at the selling Salesforce, the security with maybe some put options, and just and congratulations to everyone that's continuing to just learn. Just learning is a bonus. I look at knowledge as like making money in the markets. We gain something just because it's not monetary. If you didn't trade or you didn't make any money, but you learned something new, that's great. That's fantastic. Now let's keep going. Let's not stop there. What else do we have tomorrow? Like the earnings don't stop just because Salesforce. The markets keep rotating. So tomorrow, let's look at what we got pre-market tomorrow. Cannabis stocks. I love cannabis. I love this. Canopy Growth. They've been a real disappointment as of late, but who knows? Maybe now Biden is now reclassifying and restructuring where marijuana might be federally legal in America. Finally catch up with times. Like you guys are still like cavemen over here. Canada, we legalized in 2017. Like we were following this entire sector from its infancy. So I've been a part of Canopy Growth. I can tell you from day one what this company was called, how much it traded for. I can tell you the whole history of this company. There was some CEOs that were scammers, come in and go and knew this, that. There was a lot of regulations. There was reverse stock splits. There was a lot that happened with this, but there might be potential if US starts federally legalizing, might start bringing in some liquidity into this sector again, and we'll see what happens. But if you do follow cannabis, if you do smoke it, whatever, you can trade it. You can make money. You can make a few trades, make a couple $100, and then go buy some weed. Free weed. that's you can do that. Foot Locker, okay, so retail sales over here. Foot Locker, most of you guys have shopped here before. Are Foot Lockers closing in your malls? Are they thriving? What's going on with Foot Locker? So you can trade these companies. Dollar General, okay, so these I love these ones, these little ones like Dollar General, Foot Locker, Best Buy. These things are having a difficult time in today's economy. I've seen Best Buy's closing. You guys can probably tell me too, wherever you guys live around the world, and you guys can probably tell me, are you seeing Best Buy closing? Are you seeing Dollar General's closing down? Are you guys seeing Foot Locker closing down? If we start to see Red Lobster is closing the doors, guys. Endless shrimp events are ending. I'm sad. I'm really sad about that. I love the endless shrimp events. How many of you guys love that? They're gonna go bankrupt, our Red Lobsters. If they're still trading, you could look to short the company. You could look to start a short position if it hasn't already been shorted and you're too late to it. So that's why you got to kind of be there early, doing your education on this. You don't want to be late to the party. You want to get there before the party starts. So that's where it takes a lot of research. You got to kind of predict these things before they happen. So tomorrow, this is all pre-market. Do we have any big names? I tend to always look for those big names like Salesforce. Not really. There's not too many big names tomorrow morning. What do we have tomorrow after hours? Okay, we got some big names now. So tomorrow, same thing. Costco. Costco is a big box retail store. Very, very popular in North America. We will see, earnings per share $3.70, revenue quarter over quarter 58 billion, growth outlook looks positive. We'll see the actual numbers again, but it's not always just about actual numbers. Listen to guidance. Maybe they see something with retail spending. I don't know if you follow Walmart, guys, but I do follow these things. Walmart, I listen to what they're doing. You know what they're saying? They're following consumer habits, consumer spending. Right now, consumers, it's a lot of money for consumers to go to grocery stores and buy their groceries and things like that. What Walmart is seeing now is a big increase. When you walk in and there's those rotisserie chickens already cooked, they're seeing a significant increase in consumer spending coming in and buying those cooked rotisserie chickens, because you get a whole meal, and I don't know what they're trading at, or selling at, not trading at, but $10. Costco has them, your local grocery store has them. Walmart is seeing a significant increase in those, and they're seeing consumer spending. They want something cheap, they want something compact, all ready to go. They don't have time to cook because they're working 2 jobs. They're trying to make ends meet, so they want to just walk in, get something quick, and get out and have a good meal. That's just coming from Walmart, what they're seeing with consumer spending. How will that affect Walmart's security? Its share value? I don't know. Maybe they see retail spenders are coming into Walmart, but they're buying. They're seeing a pattern of what they're buying, and maybe they're making good revenue with these pre-made meals and things like that. So why is that? Why are consumers gravitated to go get that? Because maybe to buy a raw chicken costs $10. To buy all of your necessities, your spices and things like that costs money. To cook it costs time. You might be in $20-$30, and then you got your but people do enjoy cooking their own meals, but maybe you can go buy the whole cooked chicken ready to go for $5-10. It's just easier that way. So they're seeing a big increase in that, and they can't keep the supply going with that. So I don't know. I read up on these things. I read up on Walmart, and that's what the CEOs are talking about right now. So we'll see what what Costco says tomorrow. Costco is really important. I do trade the Dow Jones. I will be watching this. Maybe, like, you know how Dow sold off over 400 or 500 points today? Maybe Costco is going to be kind of like the cushion where it finds some support and maybe finds a bounce. Maybe Costco has really good earnings, and that might be the catalyst to get things started tomorrow. So think about that as well. There was like the engineered moves. Salesforce kind of had the drop in the market, maybe allowed shorts to cover their positions. Maybe Dow will kind of consolidate near a area of demand. We'll look at our 4-hour charts today. And maybe Costco might be the catalyst to get things started to recover. So, and I know that Costco is making money. I go there all the time. It is busy any day of the week, and your average cart is like $500 when you go in there, so they are making money, hand over foot over here. Then we got Dell Technology. So make note of the time, 4:15 p.m. Eastern. Dell Computers, Dell Technologies, 405. Okay, so we're seeing $1.26 earnings per share, almost 22 billion revenue over the last quarter. Technology has been doing good lately. AI has been doing good lately. But again, their forward guidance. What are they doing? How are they incorporating AI into their system? Do they have anything fresh in the future, or is it just the same old that they're going to tell us? And then maybe there might be a little bit of selling pressure. So Dell and Costco, big names after hours, whether you're trading or not, or you are in a trade, just keep an eye on these and see what happens. Start these. If you have a little watch list and you watch, put Costco on your watch list. See how it trades throughout the day, and then once they release their earnings, put Dell on your watch list as well. Watch and see how it's moving tomorrow, the tech sector, and then going into earnings. And then who else do we have? Then we got some names that maybe you haven't even heard about, but here are your big names that you should be focused on. Okay, so that's earnings. Yeah, what is that? Hirschhorn's $5 for one at Walmart here in San Antonio. Yeah, so yeah, a full cooked chicken. Like, I'm talking those big rotisserie chickens for $5. Like, you can't go wrong with that. It's perfect. Yeah, so what is the point of even going buy a raw chicken at the grocery store for $15, $20, and then you got to get all your spices and cook it and take time out of your day to cook? Go buy the rotisserie chicken for $5 and you got a meal there. Throw in some wedges in there too. Like, you got a full cooked meal. You can't go wrong with that. And Walmart is seeing a huge increase. They can't keep enough of those rotisserie chickens on a daily basis. Why? Because it's supply and demand. It's real simple. Guys, if we want to get into a business, rotisserie chicken business, we could sell it for $10 and we'll make money. Okay, so think about that little side hustle for us. Rotisserie chicken business, guys. See how we can think of businesses together. Okay, let's get into now a few signals that were sent out at SST. Okay, so here was a Dow buy. Okay, allow it to come down, that big dump, and then big bullish candle come back up. We're looking for buys about 38,500. Got a few bars to come back up for about 60 pips in and out. That was earlier this morning. That was kind of Wall Street session. Is Dow up there now? No, there was the drop, because you got to know how to trade throughout the day, mid-afternoon, and know that Salesforce had earnings. This was a little quick little signal that was sent out today, this evening, actually, right over here at 7:30 p.m. So just a couple hours before we started the call. Looking for a quick little sell below this area, 38,150, to maybe trade into this liquidity and fill that little gap up right there. And there was a nice little move as well. I'll show you that. And also gold. Okay, so sell gold. This came out 8:37 p.m. So 1 hour, just 1 hour, 60 minutes ago, our signal came out looking for a sell below 2,338, and these are 10-minute time frame. So these are 10-minute candles. Your 10-minute candle closed with volume below, pull back below, and you could have sold any one of these. Place your stop loss. If you want to make the entire range, or if you understand structure, that's where you can reduce your risk and learn all of those things. This candle dropped, filled the prior wick, maybe dropped a little more, maybe it rotated back up, but nice little drop right there for quick little 40 pips. And there's a 2.5 lot sell at 23.37, drop down for 30 pips, pip and dip, and grab. Look, how many $5 chickens can we buy with this? like $655. I got enough chicken now to buy for every single day for the next year. So a little trade like that, now we got groceries. We got rotisserie chicken now. Now we're good. So it's just looking at zones in and out and not playing around anymore. So I hope you guys get to that stage where you guys can trade and buy your groceries with your trading money. I hope everyone gets to that point in here. So everyone on YouTube, pinned at the top of the YouTube channel is this free Telegram group. Guys, we gave you guys that signal right here. If you join this free Telegram group, you'll get some free things in here. There was the setup right there was given, and there it drops, and we do take the trades. As long as everything kind of lines up, there's volume closing below and retest and all of that stuff. You got links to all of our live YouTube sessions in here. Here was also a signal for you guys to look for buys on gold this afternoon. And guys, have any of you guys played the Monopoly game? What about Monopoly? You know your Monopoly board? Okay, so imagine playing Monopoly and never buying any assets or investments that generate income. Imagine you just went around collecting $200, giving your money to the rich and trying to stay out of jail. That is how most people live their life. You know, if you want to kind of look at life as a Monopoly board, you know, that's kind of like life for a lot of people. They're just working around in circles, giving their money to the rich, and just trying to stay out of jail. You know, I don't want to take it that far, but you know, this is what you can do. How about we flip the board and we are the ones that are looking to buy assets. We're looking to invest our money. How about we're looking to generate passive income and we can flip the script and flip the narrative. So that's what we got to look for, guys. Look for your opportunities. Knowledge is power, can help you in your everyday life, whether you're trading, you're investing, you're learning a little bit about how the financial system moves and operates, and you can learn a little bit and start to think about other things as opposed to just working your 9 to 5 and just paying taxes and paying your interest to the banks and things like that. Let's start to learn financial freedom and start, you know, but you got to learn. And it takes time. I don't want to sound like everyone is just gonna become, you know, very, very wealthy just overnight. It doesn't work like that. So you guys know that. Like, I'm talking to adults here. I'm not talking to children. So it's a lot of hard work. This is our weekly schedules, our daily schedules. Keep you informed. All of this stuff, guys. Just join this free Telegram. It's pinned at the top of the YouTube. You've got all of our links to our website, to YouTube. If you're interested in an expert advisor, this is MQL5. This is our SST kill shot. If you want to learn more about expert advisor, have an automated trading system, over here you can download the free demo. There is a Telegram group that will help you out in here. The developers there. Learn all about set files. Practice it out before if you want to use this, because there's a lot to learn about EAs. So it does take a little bit of background knowledge. Some of you guys are really, really informed about EAs, and you guys are doing really well with this. You can alter it to your own set files and to the securities that you trade and all of those things. Okay, so that's over there at MQL5. There's the link. So okay, let's get into the charts now. This is why everyone is here. We're here for the charts. Welcome everyone. Sorry, I'm just going up in the chat to see if I missed any questions in the Zoom. Archie, sorry. Yesterday you had an encounter in gold. When you entered, it went 20 pips and then lowered my stop loss to 10 pips, and it hit stop loss when it was again on entry. I feared to enter it again. Maybe you went your stop loss to break even too early, and if I'm reading that correctly, and maybe it tagged you out. Try and allow trades to breathe a little more if you can. But don't fear to enter again. Why are we scared? Why are we panicking? Are we over leveraged? Are we following the direction of the trade, the volume? We can continue to trade with the volume. Don't be scared to enter again if everything is lined up properly and you're not risking too much. So this is where we talked about yesterday. If you're trading 1% of your entire account and you're doing 5 trades a day, you've only allocated 0.2% to each of your 5 trades for your total 1. So if you get stopped out on your first trade and you're still kind of following the volume, the momentum, then get back in with a 0.2 and don't panic, because you still are trading within your risk. And then your goal with that next trade is to recover your lost liquidity and get back to break even. Then let's say we get back into another trade and we recover our first loss. Now we're back to even playing field. Then take it easy. Just stop, relax, review the market. You're back to break even, and then let's regroup and let's start again. So that's another thing with trading, is managing your trades. Always, ultimate goal is always to get to break even. I look at break evens as always positive. So some days we start our day and we're already automatically, we've taken a couple hits and we're in drawdown. Our goal of the day is to get back to break even. That's our number one goal. Once we get back to break even, we can then breathe, relax, review the markets, and then we look for profits continuing that day. But I find that a lot of traders get rattled right away when they get into drawdown, their first trade of the day or two. That's why maybe feel out the market. Once you, like when you get up, you still might be tired and looking at the market. Take a small little feeler trade if you have to, and then maybe if that one stops you out, you haven't leveraged anything. Don't even use that towards your 5 trades of the day. If you just go in with a little tiny micro lot size, just to feel out the market, because sometimes our patterns, our first trade of the day is kind of like a loss, because maybe we're just getting up and we're looking at the markets. Gold is dropping as I'm speaking, guys, so it's breaking down. We'll get to gold and all of this, but don't fear anything. That's what I'm trying to get at. Don't panic, don't fear, nothing to be scared about if you're trading within your certain amount of risk. If we're over leveraged, then yeah, you're going to panic, and then you're not really going to learn anything. If you're scared to take trades, if you're scared when you're in a trade, you're trading scared. Scared money doesn't make money. Scared money won't make money. You got to be confident at what you're doing. So take the time to learn. If you got to step back and use a demo account to learn, you have to. Okay, there's nothing wrong with it. There's nothing negative with that. If you're trading live money and you're scared of every single time you're taking a trade, or you're in drawdown, or you take a loss, things like that, then you gotta kind of go back to the basics and learn, and then come back stronger. That's what I would recommend for everybody on this call. Okay, so okay, anyways, let's get back to the markets. Yes, thank you, Wayne. I appreciate you. Don't forget to hit the like button, guys. I appreciate you. There's not a lot of not a lot of people on our call today. I know it's really late, guys. It sucks. It's 9:46 p.m. Eastern right now. It's very late for you guys. But you know, we might hit some people around the world that want to learn at this session. But I like to learn at this session because the markets are not trading as volatile, so we can really break things down, concepts and things like that. So we did a thorough analysis on gold yesterday. Okay, so we spent some time on it. So this is the same chart that we had from Monday night when we started. Okay, so you see I haven't really changed the color of my zones yet because I wanted to do it with you guys on the call. So this is the same gold chart. If you joined us early this week, Monday night, Tuesday night, last night, and today, I haven't changed anything. So early in the week when we started, like Monday we finished, it kind of dipped down into here and came right back up. Yes, there was a bullish candle that did close up here on Tuesday, but did it continue to break that high? No. There was a bearish candle that came down, kind of consolidating down in here. So the buys, we're nowhere near this buy, so I'm going to get rid of this for the rest of the week. We're going to focus more on where the volume is. This is still going to be a kind of supply box. I'm still going to bring this across as a consolidated zone in case the market of gold does come back up here. But right now, you see this level that I had green going across, where it was red here, red turned green right there. And now, you see how we came up there Wednesday at 5 a.m. and kind of traded into here, then they dropped it. So if I extend this zone, continuing to go into the future, I'm going to make it red. So I'm going to make it red real fast right now. And this is telling me that, sorry guys, let me just figure out here, where's my box here? Oh, I don't even have it here, my color changer. Okay, but let's, if you guys can on your charts, change that to red. And this one also coming down here. This was red over here, red over here. It turned green right here with this body closing above and pushing up. So if I continue to extend, and it's right below that key yellow line. The key yellow line is my daily point of interest. So you can see that we did have a bullish candle come up, go green, 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 trade into there, got rejected. So bring this zone across as well, and if you can on your charts, flip it red. I'm not sure why mine is not allowing me. TradingView acts up from time to time. I hate when it does this, but there's nothing I can do in this situation. So imagine that that's red. Volume closed down, so it's still red. Now look at our 4-hour candle. Oh, here it is finally. Now we got to come up here. Okay, here it is. Sorry guys, you see how long it took to refresh? There we go. Okay, technology, TradingView, get your shit together. Okay, don't be lagging here when we're live. We're representing your TradingView platform. Don't embarrass me here. Okay, so guys, you see what I did there? Red, red. We're below our daily point of interest. RSI on the 4-hour is 36. So it still has room to drop. So it still is pretty weak here, has room to drop. Now, let's continue to follow this volume. We've got 3 hours and 10 minutes to go on this 4-hour candle. So we broke lows. So is it still making lower lows and lower highs, lower lows and lower highs? Yes, it is. So what happens if they flush gold all the way down to this yellow line area? Okay, we're not too far away from it. We're only like 20 pips away from this. This is where a 4-hour candle kind of made a bottom right here, right here, right here. We're still holding above 50% of this big bullish candle right here, and that's what kind of rotated the market back up, pull back, continued to make those highs. Now we're retracing all the way back down. Do you guys see maybe we might be making a big double bottom on gold on the 4-hour? So here is your rally to the downside, one bottom right here in the green box. We came all the way right back up to there. There's our neckline, our resistance on the 4-hour, 23.62, 65 bucks, and then we're coming right back down. So what happens now, if it actually physically makes a double bottom in the green box, we should see gold maybe come down to 23.30, 23.25 in here. What happens if it just taps the top of the green box, okay, and it goes up, or comes somewhere near this yellow line and then starts to make its way back up? Where first thing it wants to come back up to is test this supply level or this daily point of interest, 23.42. I don't want to say gold is going to come all the way back up here, because look at all of these levels of blocks of resistance we have. We have this block, we got that block, we got to come back in this consolidated zone, we have this big block, and then you can continue to stretch this zone across. So you see how much resistance we have above us. So there's got to be something substantial that happens gold news wise to push gold to come back up. If not, we might be continuing to sell back down into this level. So right now we still have a bearish 4-hour candle. What you can do now is start to break it down to hourly, start to look at the hourly move. So hourly is still pushing down, lower lows, lower highs. This hour came all the way up, tapped into 23.40 and started to drop down. So if we get an hourly candle come down to tap our yellow line, and maybe we get an hourly volume close below there, then what we got to do is judge where there's some hourly structure in the market. I can already see some hourly structure by looking back here. I'm going to use a white line to signify and illustrate hourly. So right here, I'm going to make this white, and I just want to explain it. Okay, so the reason why I placed a white line right here is, see the big red candle come down? Kind of, if I go up 50% right there, you can see exactly half of this red candle, open, close. There's about 50% of it. You see the green candle come back up, go down, push down. Now we closed this green candle, closed above it. See how it's retesting? Now it's used as support, 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 but then the red candle closed below. Then we kind of consolidated right here, and you see how the bodies and wicks are near this white line and continue to push. Now again, now when I look at the white line, we just crossed below it, came back up, crossed, touched it, back up, came to the white line, back up, came to the white line, back up. Now we might get our first red candle close below that red line. And we do have an hourly candle that's going to close in 6 minutes. Okay, so first thing what I do is I'm going to wait for this hourly candle to close. And what I do is I ask myself, is it closing below the white line? Maybe yes. Do I assume that maybe it will pull back, come up green? Possibly, because we're reaching maybe a daily point of interest right here. We're approaching that big daily demand box. Let's take a look at RSI. So RSI is 33, might continue to come down in here. It might find an oversold situation where we might find some buyers. But what I do is also I judge the size of the volume that closes, the open close, where's half of it. Then I start to maybe push my white line wherever half of the box is. I'm going to keep it where I had it and continue to follow this area, 23.35. So if I get maybe a little bounce to come back up, maybe in the Asian session going into London, what happens if gold finds a little bit of demand and comes back up and closes above there? I might be using my white line to look for buys above 23.35 and just to take it right back up to 23.40. That's a 50 pip zone. Get in, out, make 50 pips, because I still got to respect this red box, because it could just come back like a counter buy, get right back up there, and then they reject it back down. And then this is exactly what we're going to see. We might see a move like this, come up, green, retest this. We couldn't buy that yet, but I know it could go up 20, 30, 40, 50 pips. And I kind of don't want to gamble in this red box because supply is coming down on a higher time frame. I'm happy getting my 50 pips in and out and judge what's happening up there. Or I can leave a little bit of a runner to continue to see what happens. But I'm assuming it will come up there, pull back, and then see, trade into 50% of that big red candle, and then they drop the market, and then that might be enough supply to absorb those buyers and continue to drop it down, take out maybe this daily low, and then drive it down into the box. And then in the green box, that's where again we might see then our 4-hour candles start picking up demand and start to maybe start the reversal move on gold. Okay, this is just hypothetical. I don't know what will happen. That's why I take it candle by candle, on the daily, on the 4-hour, on the hourly. But if I'm looking for small scalps inside, I can start to look. So that might be a zone I might be buying above there. But if it continues to drop down, then what I do is I stay with the sell side bias. Maybe if it pulls back green coming into here, then it uses the white line, 50% of the candle as resistance, and then maybe I continue selling with the market to take out this and come down a little lower. Okay, so that's for gold. Right now, it's still bearish. If you're trying to buy right now, you're buying against this hourly bearish candle. Like if you look on the 5 minutes, see, yeah, there was a nice little scalp right there where it closed above and came right back up. But again, measure the move. Did you have your mind set to come from like white to red box? Get your look at that. That move is 40 pips. Okay, it's not bad. It's a nice little counter scalp. Get in, get your 10, 20, 30, 40 pips and dip out of the market, because you got to respect the bigger red box above you, and they're bringing it right back down. So we did close below. You see how these 5-minute candles, if I want to trap right now, my white line to my yellow right there's my trap. Okay, are these 5-minute candles of gold going to trade in here all day? No. We know that they might come back up and try and close above there and then attempt to come back up there. That's that 40, 50 pip zone I just talked about. We might continue to bearish flag and continue to close below that daily important yellow line, that the point of interest, come back up, reject it, and then we're trading back down into our green box. And then we have to respect this green box where maybe big buyers are in the market, because this is a big green box from a higher time frame. This is from a daily. So, and then if we're selling down into here, you might need to learn how to close your position where the buyers are. You give them the bag. Exchange. So if you take kind of like a sell and it drops down to the top of the ground, you made 30 pips. If it can dig deep 50% in here, you made 50. If it comes down to the bottom, that's a 60, 70 pip move. It could bleed right down in there, but you got to know that it could reverse and come back up with a big wick right in here, because this is a higher time frame demand box. Your 5 minutes can just come right in there and drive right out of there before you blink. You know what I mean? So you got to know. Maybe we don't even come down in there. See how it's coming down? Got a wick. Coming down, got a wick. So they're starting to make a little bit of depth of market support right here at 23.54. We're still below the VWAP. We have this cumulative volume delta is still negative 400. You still have a lot of selling pressure, but maybe we might find a little bit of bounce or a reversal in the market very, very soon for gold. That's just lower time frames for scalping, but we're going to focus this week on the 4 hours, the higher time frames. But did you guys understand that little breakdown of having a mindset of a scalper to maybe get in and out from some quick little bounce buys, but maybe continue with the selling trend? I don't know how to explain that differently, but like, you can still stay in your longer sells, but if you find some little scalps here and there, you're still counter trading, but be disciplined enough to grab your 20, 30, 40, 50 pips and dip out of the market, okay? Because that selling pressure, you don't want to get absorbed by a big seller and continue to push you down. Yes, it could be where there is a bottom created, and that could be the final bottom that starts to break out, but even if you get in and out and you grab 40 pips and then it pulls back and continues to go up, you can look for those lower time frames to close above structure, flip your zones red to green, look for a pullback buy, find those fair value gaps, and get right back in. It's don't understand, like, if you take a trade, it's not the end of the world. You know, there's multiple trades. It depends what type of trader you are, okay? But it's hard to fight this 4 hour candle. If you look on the daily, let's look at the daily candles of gold. Look at this. Okay, so this is the daily of gold. Okay, so overall gold is still bullish, like, you know, but it come down. That was that counter buy, even 3 days, 1, 2, 3 days, and then look at that big bear candle took them down, and we're coming down. So think about it. Look at the daily candle. It's near the low. This thing could continue to bleed out down into here. Yes, there might be small pullbacks on lower time frames, but you still have daily bearish volume coming down. So be careful. The overall higher time frame trend is daily is bearish, coming off of the big yesterday bearish candle. 4 hour candles are still bearish. So, you know, in order to flip the market to be a buyer of gold, look at the hourly candles. The hourly candles are still bearish. You've got to be careful. Sometimes you got to let them bleed out. Maybe we'll come right into our green box and reverse and come back up. Okay, so that's gold. I don't want to spend all night on gold. We did that last night. I want more Dow Jones today. Hurst, nice explanation. Thank you. Okay, so did that help, that explanation, guys? Do you guys understand how, yes, you can be a swing trader, you can be a long, you can hold gold like a sell for multiple days now, or you can just get in and out. I'm in a long position selling gold, but I'm scalping it throughout the day. The little pullbacks where I'm just getting in and out. I'm buying my rotisserie chicken by scalping the markets, but I'm paying the bills with my longer sell on gold. Okay, maybe that will make more sense. So I'm just doing some scalps to buy my groceries in and out. 30 pips is to grab me enough chicken for the week, but the longer holds are paying the bills. So that's how I kind of want you guys to get that mindset. You might be in a long position, that's going to pay your mortgage, but you can scalp the smaller moves. Get in, get your 10, 20, 30 pips, pip and dip, and get right out of there, and then continue looking. So overall, you ask me, I'm telling you the higher time frames are still bearish until we tap into that yellow line or this green box. And you can see that's where I have the sell. When we started from Monday night, kind of had the entire move coming down into the green box. If we're driving a car, point A, there's point B. When it comes down there, there's no guarantee we're going to break and continue dropping. It might, but you still got to have a plan if it gets down there, or start to go to a break even or a trailing stop loss, because that's where your buyers could be waiting in the market down there. We can see some heavy liquidity right now. See that big dark liquidity right down here at 23.52? That's at the bottom of the depth of market. There's a big liquidity in there. So maybe the sellers want to continue to push it down in there, and that's it. They're going to cover their positions down in there, and we might see a little bit of a bounce there. That might be a lower time frame bounce. 1 minute, 5 minutes might be bouncing. That's where the shorts might cover their position, close, profit, and then in order to close their position, they got to find the heavy buying liquidity, because they got to find the buyers close their sell position. Could be sitting in here, and then if we get a nice rejection out of there, maybe the depth of market will build and buyers will step in, and maybe we might see a possible reversal this evening on gold. Okay, that's gold. Before I get to NASDAQ, I want to talk about Dow Jones. Do you guys want me put it on Dow in the future so we can look at Dow while I'm talking about it, or do you guys want me to keep it on gold? Because gold is getting to an interesting level. It's up to you guys. TradingView will be a different security, but if you want me to leave it on gold on Bookmap for you guys tell me. If not, we can flip the book and we can look at Dow. It's completely up to you guys, not up to me. Okay, but let me go to Dow on TradingView right over here. Okay, so how many of you guys were on the call starting with us this week, Monday night? Because if you were, then you're going to know everything that I'm talking about over here. Okay, so Monday night we got on the call. Remember Monday daytime, Memorial Day? I'll leave it on gold. I'll leave it on gold, the book for you guys. But I'm on over here on TradingView on US30, 4-hour time frame. Okay, so I just want to walk you through in case you're new here and you missed out what happened on Monday night. So all day Monday, US banks and British banks were closed for Memorial Day. We picked up Monday night, the Asian session. So we were kind of in here Monday night. Remember the consolidation zone? I said if green volume closes above maybe this yellow area where we got all those bodies, yeah, we got impulse breaks but came back down, impulse break, come back down, impulse, come back down. So I was looking physically up here. I was looking for a buy early on in the week. I was, but I was looking more importantly, would a 4-hour candle close with green volume, just like I look for a 5-minute candle closing with volume. I'm asking you, did any 4-hour candle physically close above there with any volume? It came up, but then they rejected it. Okay, so no, there was no buy. If you got into a buy up here, I'm going to ask you, what made you buy? If you're trading a 4-hour candle, do we not tell you, when in doubt, wait for it to close out? Okay, so if you're waiting patiently for a 4-hour candle to close, there was no buy up there. So I'm going to remove this buy. Look at where we're trading. We're down here. I don't think gold is going to come all the way back up, or sorry, I don't think US30 is going to come all the way back up here tonight or tomorrow. Okay, maybe this might be a move next week, but I want to get this off my chart. This is when I tidy up my charts. Okay, so what happened? Remember, 3 things can happen, right? Doesn't matter the time frame. We could have option A, we could have continued to sell inside this, or sell and buy inside this consolidated box. Who knows? Maybe it would have been a real shitty week and US30 was just trading still inside here. That's option 1. Okay, remember, patience and discipline, sniper, chop and gap, all time frames. The impatient will give the patient liquidity. Okay, let's repeat this together. The impatient traders, impatient investors, impatient bankers, impatient market makers, impatient institutions will give the patient their liquidity. Let's all repeat that, guys. Okay, I'm telling you, you will get rewarded in the markets with patience. Okay, it's a virtue that takes a long time to learn. Think about if you were ever in martial arts when you were growing up as a kid. Like, in order to get your black belt in karate, you're not getting it overnight. It's a lot of hard work, dedication, discipline to get it. So patience does pay off. But if you're impatient, you might make a few critical mistakes. We're all impatient. We all are. Let's admit it. But if you make some impatient moves with the proper risk management, you can still recover to trade another day. Okay, but if we're trading constantly without discipline, if we're trading constantly very impatient in the markets, if we're trading constantly with the wrong risk management, we're setting ourselves up for disaster in the markets. I can tell you that as a educator. I see that is the biggest problem with traders today, is just lack of patience. Okay, I don't know how to teach it. This needs to come from within. You need to learn patience. Okay, think about it. If you wait it out, you could possibly have a payday at the end of the day. Okay, I'll wait all day if I have to. I will wait all day in order to buy chicken from the grocery store. Okay, I gotta wait it out in order to eat. So it could possibly, look at how the 4 hours were trading in here. The volume, yeah, we had a couple impulse breaks. Those could have been scalps. Like, you could have scalped that move coming up, grab your pips and dip out of the market. But if you're looking at the overall real move of the market, the volume comes back in and it's closing in our box. Okay, so what's the next option? Remember that buy setup I had? Yes, we could have possibly broke out, could have possibly closed with green 4-hour candle and a retest here, and then completely change the entire depth of market, and then maybe make our way up to here and then break out up to there. However, looking at the situation now, neither were we consolidating in here. So I'm going to remove that. Okay, so you see that option didn't work out. Did the next one work out where I said to look for buys up there? No, that one didn't work out. Which option worked out? Our third and our only option, selling the market, right? That's the sniper chopping gap. There's only 3 directions where volume can move on any security. Okay, you guys can look at any security, any time frame. I guarantee you there's only 3 options that the volume will move. Okay, so in this situation we look for the sell. Okay, did we get confirmation? I'm asking you guys now. Okay, so you guys, let's make this interactive. Did a 4-hour candle close below this yellow critical line that we were looking at, 39,000, that nice psychological number? Yes or no? Did a 4-hour candle close below? Let's all do this together, because this is when we're looking for trades on any time frame. Yes, Lillian, perfect. If someone says no, please, 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 I want to know why. Why is no? Okay, do we all agree? I know it's very simple, guys, but let's keep trading very simple. And this is how we can make money every day. Did a 4-hour candle close below? Yes or no? It's not a trick question. The answer is yes. Okay. I know this is after the fact, and someone's going to say, "Oh, Ron, this is back testing." But we do this live every single day. I want to get you guys thinking like a robot, okay? And then you're going to start to visually see this tomorrow morning. You'll see this visually tomorrow afternoon. We'll have the same conversation tomorrow night. We'll have the same conversation next week. We'll have the same conversation 3 months from now. We'll have the same conversation a year from now. I will be asking you 5 years from now, did a candle close below a critical level? And you guys will tell me, yes, it did, or no, it didn't, okay? And so we see these repeated patterns over and over and over. So just be patient and play it out. So yes, we did close. Now, what is the next observation we should be doing, okay, as a trader? What should we be doing? When it closes below, what should our mindset switch to? What should we think about? What is the next programmed move in your head? Or I can tell you exactly what I'm thinking of. But I want to hear from you guys. What do you guys do if you get a confirmation candle close below? What's the first thing you guys do? Come on, guys, make this interactive. We got like 1 more hour, and I really, really want you guys to learn this. Anybody? Okay, if not, I can join in. But I kind of want you guys to help me out here. Okay, Lillian, sorry you missed the question. The question is, if we get our first volume-based candle close below, remember direction 1 was trade inside the box, direction 2 was close above, or direction 3 is close below. What is our next move? What are we looking for? Do you just hit the sell button blindly and just go in and hope for the best? What is going through your mind? I'll tell you exactly what I'm looking for. Okay, so first thing I look for, if I do get a candle close below, I look at the size of the body of the candle. Okay, I don't know if a lot of you guys look at that. Did it close like, was it red, and then it closed right there, like right below the yellow line? Okay, but this one actually physically closed deep down, okay, all the way down there. See the low, and then it came back closed. So that's a pretty significant sized 4-hour candle. And then look how naturally, then the next thing I look at is 50%, half. Perfect. You guys got it. Yeah, Lillian, no, wait, going back up to 50%. Franco, you got it. Retest halfway. Perfect, guys. Yes. Wait for the retest breakdown. Cam, excellent. See? Okay, so you guys are kind of reading my mind. So first thing I look for is the size of the candle. Is it more of a smaller candle that closes with volume right below? Then maybe the buyers will step in and bring it right back up. But this is a pretty serious sized candle that closed down after it got rejected up here. So they trapped those buyers coming up, and then they move the market away from them. The key is diverging away and putting some pressure on the buyers. Okay, think about yourself. When you're buying, right, you're in a buy, your stop loss is below structure. And then when you see a big heavy based candle, you probably panic, okay, or you get scared. And then what happens is you close out your trade. So this could have been hunting down to grab those stop losses. It's a pretty significant candle. And it closed near the low. That's another thing I look for. Did this candle come all the way down, catch a wick, and come all the way back up and close right there? Then I can kind of anticipate that the next candle will open green and come back up. But it closed near the low. If you look at the entire size of the candle, we kind of closed 90-95% near the low. So heavy selling pressure above us. Now, next thing I look for is my eyes gravitate towards 50% of the volume right in here. You can see that our zone kind of predicted it, because you don't need to change anything. Your zone is right there perfectly. 39,000 is half of that. So what I assume is when there's a significant drop like that and then it comes back up, I automatically assume the next candle is going to open green, because we're dipping down into an area of support or the depth of market down here where we haven't been in a long time. So maybe we'll find some buyers that initially want to buy the dip, right? And then they buy, which they did here. It opened green and it came up green, green, green. But you see, it stopped right there at 38,965. Did it attempt 50%? No, it didn't. Don't always think in your mind that Ron says it's going to retest, that it always is going to retest 50%. I wish I could tell you that for a fact it would, but I can't, okay? It came up, but then it got rejected below 50%. So what is that telling us right now? Let's develop our playbook. What is that telling us? If it gets rejected below 50%, what that's telling me is the offers are coming down. The supply is coming down. They're not even allowing the buyers to retest up here. So that's telling me maybe a clue that this might start to really push down. Okay, and then they do. I can see that the resistance is right there exactly, 38,965. We didn't even trade into 50%, so it is a lower high. And then our next move is either where do we want to enter in the sell? We've got our confirmed candle closing below. We have a retest that got rejected. So now it's just your options. Do you want to take the sell at the break of the body? And what I do is I also judge the size of the wick. Okay, if it's a long wick and came back up, we've got a long distance to fill that wick. So maybe I'm not looking to maybe take that trade right away. But this is a pretty relatively short wick where we close near the low. So as soon as it came up, it trapped those early buyers, it rejected them, and then right there, when it breaks, you could possibly take the sell right there. That's what kind of we were looking for volume close below, take the sell. Or you can take the sell when it breaks the wick. That's more conservative entry on any type of trade, and you can get in there, okay? And then the next thing is, once you take the trade, where are you placing your stop loss? Remember, a conservative stop loss is 50%, okay? That's conservative. You could be at the top of the bearish ignited candle. So when you learn your candles now, it opened ignited red, you could be at the top, or you could just be at the top of the entire structure. And yes, you are risking a lot more on this, right? So that's all going to be up to you how much you're willing to risk, okay? But let's just play it out now. What happened? So then the next candle continued to break, and then what do I do on the bar by bar? What is my next thing that I look for? Always look at the size of the base of the candle, the volume size of the candle. There's your open, there's your close. Where's half of it? Half of it is right in here. Again, where's half? I place lines on my chart. It helps me. Some people don't put lines on their chart. It's all good. But just do what you need to do to kind of identify halfway, okay? And then another thing too, that's just a halfway line. It might not hit exactly the line. Sometimes it does. But if you want to give yourself a little bit of like a golden zone, you know how like a Fibonacci works, where it's the 50% and then above or below it is the 618, whether it's swing high, swing low, or swing low, swing high. It's the 618 and the 382. So you can kind of mimic a Fibonacci if you don't place a Fibonacci by kind of maybe a little bit above the yellow line. And what helps me to determine, because when it's happening live, you don't know how big to go or how high to go above or how low to go below. So what I do is I use the yellow line 50% as a guideline, as a point of interest in order to start my drawing. You know, if we're drawing a picture, we got to start somewhere. We got to draw a line and then we can go off of it. So that's kind of where I'm starting my drawing right there, that yellow line. And then what I do is I look to the left of the chart, how volume kind of reacted at this yellow line. So I can see that there was wicks right there. You see how my little box is right there? you guys see? Let me zoom in and show you so that you guys can try this and practice this and get good at this. See what I just did there? Okay, I used the yellow line as my reference, and then you see how I got a body and a body there, and I just drew my box there. Okay, so I've got a little bit of a box. Now what you can do is the same distance below, you can bring your box, and now you've identified your zone, correct? But some traders want to stay with the bearish trend, and maybe that's all they want, is to keep that zone and bring it across. So let me bring it across and show you how this would have looked if you did this. Okay, I know it's after the fact, but I do this when I'm trading on a daily basis. So then what color would this have been? You tell me. Would I keep it white? Would I make it green? Would I make it red? What color would this have been? Green, Lillian? No. It would be red. Why? Because see the retest, the sell position pushing down. When that candle closed, where I judge where 50% of it is, it's selling pressure. So I would have made this like kind of a resistance or supply area. If the buyers buy into this, I want to see that the sellers will reject it out of here. So I would have made it red to continue to see if the selling pressure is still pushing down this move. And see how I look to the left? All I did was use my 50% rule, and then I look at some just recent candles there. I grab that little zone, stretch it across, and then I make it red because we're selling the market. And then look at the retest. Okay, now this happened in the market where it opened down here. It did come down. What time? Tuesday, 2 p.m. Okay, so it did come red, stop right there, made a low. It came back up. Buyers bought it right back up, but look at where it traded right into. Traded right into kind of like our 50% box right here, and then got rejected and then closed. Green volume. This is kind of an indecision candle. The sellers were in control when it first opened up. Remember, this is 4 hours. And then maybe the next couple hours, it came back up with buyers. Then near the close, the sellers rejected it right in that perfect area and closed it. So there's still a little bit of bullish volume still left. So now we got kind of some consolidation. Now look at how they opened our next bar. Like it's, guys, this is fantastic when you learn this stuff. Okay, so look at what they did. Just follow your candles. Like if you're on the 1 minute, I dial in on the 1 minute. If I'm on the 5 minutes, I zoom in. If I'm on the 4 hours, I zoom in. Look at, so how did they close the candle? It was with selling pressure coming down. Think about it. Sellers, candle closes. What do? They gap it down. See the gap down? They're kind of giving it a push to push it down. So it's kind of giving you a little bit of a clue. So they gapped it down, and did it come up green? Did it even make an attempt to come back and test the previous close? I know it's not by much, but they closed this at 38,829, and they gapped the next bar down to 824. That's a 5 pip gap down. I know it looks insignificant, but think about it. They pushed it down 5 points to kind of give it, like a head start, to push this thing down. And then was there any buyers that bought the dip and bring it back up? We would have seen that. Then the candle would have been here and it would have came up. I don't even see a wick on this candle. So that is an ignited bearish bar. It's got heavy supply opening up this time frame. And look at what happened. It completely came down red. We engulfed the only buying volume we had, and look at what they did. They pushed it down. Did we take out that previous low? No. But more importantly, we kind of took out that low right there, and look at where it closed. It closed below kind of structure. If you look to the left of the chart, we closed below 50% again of that yellow line, and then now look at your next candle. Like you can continue with the momentum. Assume then, okay, again, let's go back. Let's play this back. Open, close. Where's half of it? Let me just get rid of this red box so you can see. Where would you have placed your halfway? If we just saw this 4 hour candle, open, close. Look at the halfway point. It's sitting there at our yellow line. We didn't even have to put a halfway point because it was already there from our daily point of interest. See how kind of the candles line up perfectly on all time frames if you do proper top-down analysis, and it's a nice whole number, 38,800, fantastic number. Again, I can use this yellow line and then I can start to develop a zone. How do I develop a zone? Maybe I see two bodies right there that close below. and then continue with bearish momentum. So what I do is I use the yellow line as reference. There's two bodies that just recently happened in the market, right? Okay, so just like I did before, you find, just look at your local areas. There's two bodies right there. Bring it across. Now I've identified a zone, okay? And I can flip that red with the volume closed below, flip it red, and then this continues to keep my brain higher time frame selling, and to avoid maybe buying the market until I see a green candle come back and close above here. If I saw this time frame, it came back up green and close back here, I would do the same. All I would do is just flip that box and turn it green. That's all I would do. Just very simple. If I get a closing green candle come back up and close up there, I just flip that zone, and then I look to buys. And then my buy will be targeting to come right back up where the buyers are trapped right there. We got to recover our trapped buyers, and it might push back down. But I measure that. If I was trading that, if I bought down here, I'm not looking for the next move to come all the way up there. I'm just looking to fill up to these bodies. How big of a move is it? It's 30 pips. But then if it continues to come up and come up to my next yellow line, 65 pips. If I can fill that green wick, I'm looking at 88.90. But I still got to respect this red box. It might come up here green, and then they reject it right back down. And then I've just pissed away 50, 60, 80, 90 pips, and I got no chicken to buy. And then it came right back down here, and then they're shooting it down here, and then my stop loss goes off. So you kind of got to know if you're counter trading or you're trading with the trend. You can make some money counter trading, but you got to wait for volume to close above there. So how did this open? Let's just make our red box. Did it come in and trade into our red box? It opened. We assume it opens green. It did. Came up green. Did it trade into red box? Did it tap into 50%? No. Another lower high. The supply is coming down on a higher time frame. And look at what they did. Again, do you want to take the sell again at the break of the body, or do you want to kind of break those wicks? That's up to you. You know, wherever, if you want to continue selling, if you want to continue to hold your sell, if you want to continue maybe to enter into some scalps in the market, and you could have played this entire weekly push down by selling the market. And then just look now, that 4-hour candle came red. Remember, our job is to fill the previous wick. It came all the way down. Did it close below that wick? Let me just draw this line. Let me just, so you can visually see it, make it red here. Okay. Did we close below that previous low? Absolutely we did. Did anybody go through the rules? Did you look at open close of that 4-hour candle and look for 50%? I did. Where's 50%? Right there. That's about half of it. Look at the next candle. Green, and look at where they rejected it. Right at 50% and below. They rejected it. They trapped, again, all of those buyers, squeezing them. And then look at how short that wick is on that 4-hour candle. Confirmation that it closed below the low. We got confirmation that it got rejected at 50%. Put the pieces of the puzzle together, family, and look at the break. And you could continue. Do you know how many pips you could have grabbed on this US30 dump this week? Like a lot of rotisserie chicken, friends. Like, look at it continuing. It's a shooting star candle come down. Did we close near the low? Yeah. Look at the size of the wick. And then, did you continue to bring your 50% line? That's all you got to do for 1 second. You don't even have to get another line. All you got to do is just bring your previous line down right there. Are we still below 50%? You can even draw your zone. How do you draw your zone if you want? Okay, how does Ron draw a zone? If you're not sure about exactly 50%, draw a 50% line. Okay, cut it in half. You know when you're eating your steak, you cut it in half right there. So I cut that body, open, close, cut it in half. Now, look to the left of the chart at your yellow line point of reference, okay? And then you're going to start to see a little bit of structure. You will, believe me. Start to look in here. Do you see anything when it what type of transactions happened above the yellow line, below the yellow line? I can see right there. There's kind of a high and a low above that yellow line. Right there, I've kind of figured out maybe a size of a box. Come up to that high wick, go to that low wick. make it neutral now, so just so we can just concentrate on the box, bring it across, and now just observe. It came down right into there and went right back up. This body closed below. Let's continue. We never traded in this box in that area, so just continue to bring it across. And then now look at how everything lines up. This was a red, red, red candle right in the box and continued to push up. This was close. Red, 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 red. Almost hit it, but kind of went back up. Let's bring it now into the future. Okay, and look at the retest. Unbelievable. Look at this. Okay, close near the low. It opened green, green, green right into like the bottom of our box. Hopefully you change the color to red to illustrate that it's supply. Continue to push down. So make your box red. And we only look for buys if green volume closes above. Otherwise, stay with the bearish momentum. Okay, this was all leading up. The market was selling before we even had CRM in the after hours. So the market was pushing down. Look, it came back up, break. Again, look at that nice. Do we have any structure down here? Nothing. So you kind of see what it did. It filled that wick. See that wick? That went right back up. We kind of filled it perfectly. And look, it kind of closed almost right below it, okay? Oh, right there. And then again, guys, continue to go through the drill. When this 4-hour candle closed, open, close. Look at the halfway point. It's right there at the top of our green box. Look at the next inside bar. It opened, came up green, green, green. Again, it's rejected below 50% and continue push down. But it didn't make a new low, okay? So this is important. Pay attention here. It didn't make a new low, okay? And then it came back up. And you see how it's an inside candle? It's a spin top. If CRM didn't have their earnings at 4 p.m. Eastern today, this could have been the possible reversal of Dow Jones. Okay, think about it. It came down. It's a higher low from that previous low that got rejected. We kind of spin top indecision. A spin top is kind of a clue that the market could be changing sentiment. There is some selling pressure. There's some buying pressure. Kind of closes neutral. So it's anyone's game that buyers could have took it up, sellers could have took it down. Let's say, for example, we never had CRM earnings to make this big dump. This could have been the point where we would have been maybe building our way back up in the green box, coming back up here, retesting. We could have figured out where the fair value gap is on Bullish, and we would have a whole different conversation right now. This call could be completely different. If we never had CRM today, we could have been reversing back up green, and we would have been looking for buys. Okay, we were really, really, look at the 4-hour. We were really oversold. Okay, the RSI was already deep down oversold, but this is where you got to put the pieces of the puzzle together. There was a big earnings call today that continued to bleed. I saw some buyers that got trapped buying at Power Hour and didn't realize that there was CRM Salesforce earnings today, and they got clapped. And I was saying, well, like, are you not coming on these calls with us where we keep talking about this on a daily basis? And they're like, Ron, I didn't catch a call, but I forgot to look at earnings. So that's why I'm trying to program this in your heads, that let's look at Forex Factory before we start trading. Let's get in the habit of looking at earnings whispers real quick. They're free websites, doesn't cost you anything. Just get in the habit of doing this. Even before you get into trading the markets, know ahead of time what to expect. Prepare. Okay, so prepare yourself. And then now, what is Ron going to do? Okay, now we had earnings. It broke that low, came all the way down. Now we're finding, look at what they did. They kind of gapped up. They're trying to prop up the market. They're trying to anticipate. They're trying to entice buyers to buy. Okay, but maybe they're doing it to trick us. Maybe they want us to buy, and then they're going to keep hammering this down. So this is a live candle. Like over here, these are the last few candles. So let's continue. Is this box going to be green or red? What are we doing up here? Sorry, I got rid of that that sell setup over. Okay, so let's just go through the motions now. What should we be doing? Okay, so this green box, number one, let's do this together. Let's flip this green to red. The volume is below, so this might be supply going into the future. When? Tomorrow, Friday, maybe next week. Okay, so all I did was just flip it. If we do come back up green, for example, tomorrow, tonight. If it comes all the way back up green, that might be where they reject it and push it back down. Okay, so let's get in the habit of, just understanding that that could happen. That is a possibility. Okay, it could, yes, we could get a rally, come back up, but that supply could short that back down. Okay, so now that big 4-hour CRM, Salesforce candle, open, close. Where's half of it? Okay, so let's place a yellow line at the halfway. Okay, remember, Ron smoked a little bit today, so maybe my eyes are not as good as yours, but there's the open, there's the close, half of it. Am I good, guys? What do you guys think? Remember, Ron's eyes are glazed a little bit, so is that the halfway point, guys? You guys tell me. But now, okay, so let's say let's say, for example, hypothetically, Ron smoked a joint and his eyes are not working 100%. Now, how can Ron confirm this area? Now what I do is I got my halfway line, my point of interest. So let's look back. When was the last time Dow Jones was trading near this yellow line? Okay, so this date we were really bullish. 2 p.m. Thursday, May 2nd, we started that big bullish move. And then you see how it kind of lines up. Look at, guys, see this bullish candle right here? Open, close. Half of that green candle is our yellow line today. Okay, so always look in the past, look in the present, and start to predict the future. You see how this shit lines up properly? Then we know that, okay, we got a good area here. But you see kind of how there's some structure above the yellow line here, that wick that got rejected. There's kind of a body and a body. I don't want to make it exaggerate the size of the box. Like, I don't want to do something like that. I could, but that's kind of exaggerating the zone. What I would like to look for, let me just dial in here. Let me just zoom in so you guys can see what I'm looking at. Okay, you see this kind of wick right here, and you see that body to body. So this is how I kind of tighten up my zone a little bit. Okay, so look at what I'm doing. Pay attention to this. Okay, so I'm going to make it neutral. Okay, so you guys can see. So I didn't want to exaggerate the box because that's too much. Okay, then I probably won't be trading, or I got to wait too long in there. Okay, you can do that absolutely if you want, but you got to be a little bit more patient. So I'm looking at close, a body. See this green candle come right into my neutral box, get rejected. That one come in, get rejected. And then this one come in and bounce back up. This one come in, bounce back up. So I kind of got like a little zone. I could take it up to that wick too if I really, really want to kind of capture all of that. But I want to keep it more consistent with that. Kind of give myself a little zone. Now what I do is just stretch it back into here. Okay, and is the volume below? Yes. So what should the color be? I'm going to make it red. Okay, so now you see I give myself a little zone. Now, see how I'm just above the yellow line? If I kind of want to make it also below the yellow line to give myself a proper zone, I can take the box and the same distance above, I make the same distance below. That's it. Does that, and I just did that visually. So if I want to make sure, the yellow line should be 38,320. And then if I did this properly, my upside should be, let me measure it, okay, 20 pips exactly, right? So then my measurement from the yellow line to the bottom should be 20 pips exactly. Perfect, okay? So I gave myself a 40 pip zone. If it comes in here, I let it trade in here. But I'm hoping that this is going to be supply if it does come back up here. So now stretch it into the future. Let's stretch it into Thursday, Friday, next week, Monday, Tuesday, Wednesday, and let's prepare our analysis, our charts. Get ready for it. So see now how I gave myself a zone. See the black chart now? So if it trades from here to here, I gave myself a 4-hour zone, and I measure it. From here back up there, that's 150 pips. Okay, not bad, not bad. We can buy some chicken in there. But it has to get up here. It's got to kind of either impulse break out of there and close above in order to see that. So I'm kind of preparing myself. If it does, say for example, it gets up there, breaks out, maybe they reject it, but then it trades in here, and then we kind of maybe consolidate, you know, and then it builds, and then we come back up and we close above, and then there, boom, we could be going right up to there. Are we going to come directly right up there? No, it's got to test that wick right there first. It needs to get up to 38,410 because that's where it came down and it came back up. So that area is support, could be resistance. So before we come up there, I kind of always look at if it will fill. Sorry, let me leave this right there. I just want to move this thing to the side. Okay, see right there? If it fills up to that wick, that's 73, 75 pips. It could come up green, 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 right up to there, and then that could be an area of resistance, and they reject it back down. Okay, but if it does have momentum, we could break and come all the way up there, and that's a 150 pip zone. Okay, so I'm just making my zones, preparing myself if it does get up there in the future. We're nowhere near this zone right now, so I don't really need to worry about it. What I need to do now is, I've got no structure below me here. All I have is this big, huge green box. If they bleed it all the way down there, but what happens if we don't come down to the green box? What happens if we make a little bit of support somewhere in the market? Now, what I got to do here is kind of analyze this area. Where do we see like a sort of resistance support area? I know it gets busy here, but just kind of follow what my eyes are doing here. I kind of see this. Okay, do you guys see that box that I did? I know it's busy in here, but do you guys see kind of what I did in there? See here, where it kind of came down, it rotated right back up, then kind of consolidated here, and then when they dropped it back down, it came, retested it there, they rejected it back down. We've got some volume kind of, again, green bar, red bar, so we got some consolidation in this area, closing above, we get that next leg up, then it comes, look at it, red candle all the way down, and it comes right back up. Again, we bounce out of this green box area, and then they push back up. We close right below that area, and then they push it down. We come back, again, impulsively break out of there, come back down. Look at where they close it, below that box, push it down. Now we start to close, again, green above that box, and then we start that move. So I'm going to go with this box and trust this box. And look at, if I was on top of my game today, I should have had this done. Okay, and look at how we bounced. Look at CRM sold right into that box and came right back up. They gapped up the market and we're continuing to push right back down. So if you really want to trap your 4 hours, okay, just trap right now. Go from right up there. There's your trap zone. Consolidate. Okay, we could continue just to trade inside here for the next little bit. But what I'm going to be looking at is, will we continue to break this green box? So we might sell down a little bit more into the green box, but I'm going to give the benefit of the doubt that there's going to be some buyers trying to buy this and maybe start to maybe make the way back up. But if this pressure keeps selling, like right now they keep cutting through. Oh, this is gold. Keep cutting through. But if they keep cutting through here, we could push down. Now, where I don't have another yellow line anywhere. See this big black chart? Are we going to come all the way down there? I hope so. But that's probably not going to happen. So do we see any other structure? Right there. You see those bodies and those rejection wicks above it? That's my next yellow line in the market right there. And I know it's daily because these are 4-hour candles. These are looking all the way back to April 15, looking all the way back to April 17, looking back to April 20, looking back, like I'm looking in the past. Okay, you see there how I made it kind of resistance, resistance, support, resistance, support. So if we do drop down, maybe the buyers want to hold the market up there. So if we get like a 4-hour move and you're still selling, you got to anticipate that maybe that's it. The trend, the selling trend might stop there. It stopped there in the past where it came down and went back up. They kind of impulsively broke it down, but that was a huge rejection and it started that big bullish move right there. So yes, Dow could continue to come down there, maybe retest this and start its way back up. Maybe it might come back up. This green box should be red at that point. Maybe we see it come back down, maybe a double bottom here, maybe a higher low, we see a fair value gap in there, and then it comes up, and then we close it back around here, and then we kind of maybe consolidate in here, build the depth of market, then all of a sudden it's breaking out of here. And then you can see how you can still use this zone across, and then you kind of caught that consolidation, and then there's your breakout. Okay, that's just, again, hypothetical that it could do that. I'm not saying it will, but again, I want to have my lines, and then tomorrow if I see it come down there. So what I'm doing is I'm getting ready. Right click, add an alert. I'm creating a signal here. So if Dow comes down here, I'm going to get a signal, and then I got to pay attention to this area because it might be an opportunity to maybe buy the market. Okay, but right now it's still bearish. So on the 4 hour, this thing could still push down. If you look on the hourly, what's going on the hourly? Look at the hourly, just coming up, back down, red, green, but could continue to break for a new low and continue to dump it. Look at gold now. Look at the depth of market, how it completely changed now. What time is it? 10:44. Look at 23:48, 185 contracts. Look how thin the market is. So are we going to trade right in there? This might be an opportunity to maybe flip buy gold. Maybe these sellers are going to close their position here and maybe flip and buy. So if you're on gold right now, pay attention to what's going on the depth of market here. Do you guys understand now, US30, how everything was selling prior to CRM, and then once they released that CRM, kind of really flushed the market, and we could continue to push down. Look at gold. Wow. And NASDAQ. So gold is trading right into our green box. Let's look at it. Trading right into our green box. Okay, remember what Ron said? Maybe that double bottom bounce in that green box. Come down. First bottom. There's our neckline. We're coming all the way right back down in there. We caught a wick so far at the top of the green box. Are we gonna? And then maybe it's gonna start to retrace. But look at how much selling volume is still left in that candle. So yes, we might see little bounce buys, but sellers might continue to absorb and drop. So if you're looking for some quick scalps, like if you go to your 1 minute, 5 minutes, you could probably look for maybe start to, I guarantee there's bullish divergence right here. Let's see. Yeah, so see how it's making a low, lower low, and a new lower low in the green box? Strength should start to maybe pick up, and we might get a bullish divergence signal, but that doesn't mean that's it. We hit the buy button and just go all in. We've got to start to see, I want to see, will it trade in this liquidity? See how it still hasn't traded into this big heat over here, that big liquidity? They trap some more buyers. Buyers are trying to buy the bottom, but they're still getting sucked in, and then they're selling it back down. I want to see, is this is this heat here, is it going to start to come up? Are they going to start to tick it up a little bit? 186, are they going to start to prop it up a little bit? Are they going to build the depth of market? Is it going to trade right in here? Are we going to have a big massive transaction and then allow the short sellers to cover their position here, and maybe buyers will continue to ask up here? But you see, if I'm scalping, okay, I could use this yellow line as a reference to maybe possibly buy. So what I could do is just consolidate all of this here and just continue to watch. So now I know we're at the bottom of the depth of market. There's a big bid waiting to get hit. So maybe I need to let it hit, grab that. Maybe it comes up, close above there. Maybe that could start the buy up to there and then back up to there. It could just come up and then again pull back into here. Maybe the depth of market is building and then we're making our way back up. Maybe it comes all the way back up there and then they drop it back down. Okay. Again, if you're buying, you're counter trading the move. But there's some times where it's the bottom is going to come in and then a reversal will start. So just on these 5 minutes, if you want, draw your trend line. If you do trend lines, okay, so you see how it's still trending down. Maybe if it's a impulse break, it will come up to that trend line and get rejected. So I'd like to see volume close above here, maybe break that trend line, start to maybe develop maybe a possible short-term reversal with still understanding that the higher time frames are selling. But we haven't even transacted in this box yet. So how is this going to develop? Again, they're trapping buyers. See the buyers, they were asking to trade up there, and then the sellers want to continue to push this thing down. So look at the candle. It's spin top. We're getting indecision here. Just like there's no direction yet. Sellers are selling down. Buyers are buying it up, sellers keep selling it back down. So this is where we get a neutral candle. It might give us a clue that the market is ready to maybe reverse, but it's not ready yet. It's not developing. So this is where you got to be patient in here. And then also you want to continue to sell down here where you know that there's a big, huge bid in the market. So this is where you got to be very cautious. I know Ron says to continue selling with the trend, but you got to know where you're selling into or where you're selling at in the market. It's not just hit the sell button and hope for the best. Like, we've got a daily demand area here. The book is showing us a huge, massive order sitting here. So you have to be very careful to continue to short the market. But you got to also, if you are, you got to know that it could be a red candle that just comes down here, catches a wick, takes out all those pending orders, and then is shooting back up here. And then that's what kind of creates a head and shoulder pattern. You kind of got your shoulder. The market comes right through there to come in to trade into that liquidity, and it could be a massive order of pending buys. It gets triggered, and then all of a sudden it's coming right back through there. So even if you do sell, you got to know that it might be a quick sell. It might be finishing off your selling move. You know, that might be your money candle that comes down. It's a big red candle, but you can't get too greedy because you got to acknowledge that this is a big green box and there's a huge order in there, and then it could reverse all the way back up. So, you know, when you have like a finishing move, like on that 4 hour, that CRM could have been your finishing move. On Dow Jones, when we were talking about that big drop, that could have been where you liquidated your position and you got out on a short sell for the week. Guys, if you guys are going to continue to trade, just let things work out in here, okay? And then just watch. If you guys are going to still be trading after 11 p.m. going into midnight, just keep an eye on how things develop. Whether you're in a trade or not, watch things how they're developing. Even on the 5-minute candle, okay? So do what I do. See how it opened, closed, half of the 5-minute candle. Just draw, like I use these little lines on the 5 minutes. Half of that is right there. We did come back up green, but then they rejected it back down. So maybe I don't want to look for a buy until I see some green volume close above half of that volume based candle. Now we're starting to get, look, it came down, higher low, came down again, higher low. But you see how thin the volume of the candles are? This is where the market might want to tap into here and get that big order there. Who knows? Like, I love how things develop like this. I wish I could stay all night with you guys and kind of break this down with you guys, but I know that you guys are good and you guys can do this. Okay, so 4 hour on Dow Jones over here worked out perfectly on nice sell. Now we're kind of maybe continuing to form a little flag. Yes, it could reverse back up in later, but still, it's still bearish. Gold on the 4 hour, you know, maybe we got to let it come bleed down. Oh, this is Nasdaq. Nasdaq is continuing to push down. I didn't break down Nasdaq with you guys, but you can clearly see, look at the big green candle come right back up to area of resistance. Let's just go full chart really quickly on Nasdaq, clean it up so we can have this for tomorrow. So all of my green zones, like see the green, green candle came right back up, right into there, and then ignited candle dropped it right back down, and we closed below our daily, and we engulfed all those buyers. That should have been a clue. That should have been a bell ringing in your head to say, holy shit, what just happened? We trapped all those buyers. It opened ignited red. 4 hour candle engulfed all those buyers, and look, it even finished the move. It closed below the previous low and closed below our daily line. Look at the next retest candle. Look at again that 4 hour candle of Nasdaq. Now flip your green to red. If you want to kind of adjust it to 50%, you can maybe make it come down a little bit lower, but I don't tend to change my zones. I tend to keep them static. I don't know why I do that, but I prefer to do that. And here, closed 99% near the low, small wick. Next candle, assume it opened green. It did, green, green, green. Look at what it got rejected off of, our yellow daily line, and continued to push down. You could have taken the sell right there. You could have taken the sell right there. Where would you have placed your stop loss? Let's say you took the sell break of the body. You could have put your stop loss kind of 50% of that volume if you choose to. You could have came at the top of that big bearish ignited candle if you want to risk that many pips. That's completely up to you. I never know how much I'm risking until I measure the move. So if I take the sell there and then I measure to about right to that red box, I'm risking 70 pips. 70. If I'm going to the top of there, I'm risking 120. Then I adjust my lot size. But then my reward would possibly be coming down to the next yellow line. That's an 80 pip reward. So it's basically like a 1-to-1 on your money. Because you look here, it did come down to the yellow line, back up. It did come down red to the yellow line, back up. Here it did break, but then look at where they closed it, right at the yellow line, and look at where the bullish candle printed at the yellow line. Look at where the retest was at the yellow line. So we're coming down with some NASDAQ volume. Maybe what happens if we close below this yellow line and then they fill the wick? It continues to drop, then we're going to trade down into this location. So it's continuing to fall NASDAQ. It could maybe find a second bottom here. Like if you look here, it came down. There was one bottom. There's our neckline, and now it's coming down again. What happens if we find a double bottom and then NASDAQ starts to reverse back up? However, what if it closes below there and then retests this, and then we're filling that wick and we're continuing to drop down? That's a possibility. It did it with US30 all week. Maybe NASDAQ is just lagging behind. US30 could be the leading indicator due to CRM, and then lazy NASDAQ will catch up with this. Who knows? I don't trade NASDAQ too much. I'm honest with you guys. I'm more into US30 and gold. But if I have to trade NASDAQ, I'll trade it. I'll eat it. I'll eat off of it. No problems. But I don't know. I like the moves of US30 for scalp wise. Some candles on the 5 minutes are 20, 30 pips. If you nail the entry, you're minimal to no drawdown, and it makes your decision real quick, like easy. If you go up 20 pips on a standard, you're up $200. You can just go in and out in minutes. You look for 3 of those trades a day, you can make a good comfortable living doing it. But you got to be really understand what you're looking for out of these markets, okay? But with the proper mindset, you guys can do fantastic here. Use these markets to your advantage, guys. Don't stress yourself out with these markets, okay? You stress yourself out, it's going to hinder your trading. Be confident with what you're doing, okay? Was today's session, was it complicated, or did you guys kind of understand how I broke it down? I kind of broke it down real simple for us today. Just 50% of the volume, guys. Don't look at these Mickey Mouse candles. Like, you see this candle, let me show you. Like a spin top. You know what I'm talking about, a spin top? Like right here, this candle. Yeah, I could do 50% of that volume, but it doesn't really tell me anything. The wicks tell me more than anything. If you see a good sized candle, put your eyes right looking at 50%. If you got to use your Fibonacci tool, use your Fibonacci tool. But I'm telling you, if you get in the markets like me and you're doing this on a daily basis, your eyes will know exactly to look at. I'm telling you, when I'm trading by myself, I'm trading with a black chart and just candles. I don't really use lines on my charts anymore. Because if you see this drop from here to there, you know halfway is right there. You don't even need to draw lines anymore. I draw the lines for you guys to show you how accurate it can be. But once you start to know exactly what you're looking for, your eyes will know exactly what to look for on a daily basis. Look at the rejection. Okay, let's just go to gold quickly on that scalp to show you on the lower time frames. Did we drive out of here? Yeah, so look. So did we tap into this level? Ask yourself. No, we didn't. So what's happening? That order is pending in there. Maybe the market kind of acknowledged that huge order. It didn't allow it to trade in here. We got kind of a double bottom. So look at how it got created. The seller sold right down in here, created our bottom. So sometimes it's not always going to hit the zones exactly. See there was a bottom. Then the buyers were asking to trade back up here. They did. That's our resistance. Okay, so right there, I can see it. That's resistance. Trap buyers. They pulled it back down. Sellers sold it back down. But look at this transaction. See where the red sellers were transacting down here? Now the buyers started picking up. And the buyers now are breaking it out of here. So that's your consolidation. That's your double bottom. One bottom, second bottom. We just impulsively broke up here. Now we're coming back down to retest this level, this 23.51. This block has not moved. It's still sitting there. 187 contracts are on bid. Maybe they do dip it down in here. Then that to me is going to be the liquidity grab. Let me play it out for you guys on the candlesticks. Okay, just follow what I'm doing here. Okay, see that bottom? And then you see these bottoms? That kind of made this double bottom. but we know that there's liquidity sitting down in here. Okay, you can clearly see it. Where would it be? If you don't know where it is, I'm going to assume it's half of the green box. Okay, let me just get rid of this. Okay, you see how Ron just said it looked at half of the green box? Right there, the size of my green box, half of it, right there. I don't know if I'm 100% accurate, but that's half of it. If I kind of want to give myself a little zone, maybe a tiny bit above, tiny bit below, okay, in case it trades into there. But I'm assuming that that's where that heavy liquidity right there is sitting. So think like a market maker. What could they do? What could they do? What could they possibly engineer? It came down. We found our first bottom. We got a low, higher lows forming. Okay. Now it's coming back up. We're right to that yellow line. We're right back to our daily level, and it got rejected there. So we're assuming this is the neckline now. So this is now the push down. Look at 50% of that green candle. Okay. Sorry, I'm doing this real quick. Take that red line and look at 50% of that green candle. So if we can hold here, look at it, how sexy the area is, 2330.025, nice psychological area. If we can continue to hold here, you see where the retest is happening, right here. We're retesting the breakout area. Now let's watch the depth of market build here. Are we going to see how there's 14 contracts on bid? Are we going to see this build up to 20? And then we're going to see some offers get pulled above, and then buyers are going to continue to ask up here. Then what we're going to do is possibly break this, and then we're going to come up and fill right up to here. So if I'm kind of scalping, my next red line on the 5 minutes is right up here. Look at the structure of the 5-minute candles. They tell you there's support, kind of no red volume close below there. Kind of just grab the liquidity, came back up, grab liquidity, came up. Body. There was a physical red body that closed below the red line. There's the drop. So can we get that green candle to kind of close above that yellow and drive right up to this red line? Right now, it's kind of got rejected. Look at what they do. Red bearish ignited candle coming off of that momentum, off of that wick. Now it's testing my red yellow line right here. 50% of that green candle right there where my cursor is. Is it holding right here? Yes. See how it initially grabbed a wick? Okay, so it's holding. And all I did was 50% of that green candle. Okay, so if it develops here, and then you can see I can kind of determine a zone now. So if it holds here, I use that red line as reference, and then I use that previous wick to draw my green zone. See that? And then stretch it across. Okay, so it's holding now 50%, building. It's building the depth of market. Now, the nasty market makers, what they could do is they move like this. Let me get rid of this arrow. And if you're buying, remember, you're still fighting all this selling pressure. So it's not easy to start a counter trade and develop it. It takes a lot of work. So it came down. We traded right up to our yellow line. Okay, right up there. Now they're bringing it back down. Okay, so if they come down, remember we got our rejection wicks. It could be a physical double bottom and then go back up like this. Correct? That could happen. But what does the market want to do? Maybe it wants to come right down in there. Think about it. There's a huge order sitting there. Maybe they want to clear the board, take out all the pending orders, take out all the stop losses, and if they do engineer this move to take out that low, high probability it will come right down here, and then it could be that's like the trampoline, getting right back above there, and then it trades above, and then maybe retest our green zone, and then we break our trend line right there, and then we're off to see a short-term little bearish to bullish recovery. Will that happen? I don't know. But right now, it's not trading at this level. It's still technically holding this level, so we still haven't even traded down into here. But you see how kind of it just built one leg up, and then now it's coming back down. Okay, so now we got to build the bottom. This could continue to drop down, but if they do, let's see if this will be the area where shorts cover their position, and then this could be the major move of gold tonight, and then this could be the bullish recovery. Maybe it doesn't even come down in here. Maybe it's just sitting there pending, and it's building its market above. It's building right here. So if I'm kind of stacking positions, I see that there's a large order here. Maybe I'm building positions above here. And if I start to see this depth of market building above here, and that one's still holding, maybe this one will start to come up higher. And then we see the depth of market. See now how they're asking to continue to trade up here. See the beautiful retest right in our green box. Now it's a hammer candle, but it still needs to fill that big wick. It's not a short wick where it can just pop. So it's got some room that it needs to fill. And remember, that's a daily level. I didn't just place this on the chart. This came from a higher time frame. And then if we consolidate, maybe we're going to consolidate at the upper half, yellow line, green box. That might be where we're trading and accumulating, and maybe we will continue to break out bullish through here. But I'm also assuming that it could come back down here and build. So this trade might take 20 minutes, 30 minutes, 1 hour to develop. But do you guys understand how structure is being built on the 5 minutes? How I kind of showed you with the 4 hours, but you can build it on the 5 minutes. You can build it on the 1 minute. It just depends on your trading style. And I love scalping the markets. Believe me, I love 4-hour trading as well. I do a lot of that as well. I don't really show it to you guys live because it's boring. Our call is 2-3 hours. If we sit on one 4-hour candle, then we're just watching a 4-hour candle. But this is more faster, quicker. I can explain things quicker for you guys so you can speed up your education. But if you want to apply it to 4 hours, you can slow the market down to your pace, and you choose. I leave that up to you guys to decide what type of traders you want to be. Remember, scalping is, you have to have the right mindset for this. Otherwise, you can't turn a scalp into a swing position. You can, and then you can't take a swing and take it into a scalp. You've got to have the right mindset. If you're trading higher time frame, trade with the higher time frame mindset. Look for the bigger moves, bigger stop loss, lower your risk, lower your lot size. When you're scalping the markets, look for quick moves, 10, 20, 30 pips to fill up a zone and get in and out. That's what scalping is. So make sure you get the right mindset. But guys, that's it. 11 o'clock. I appreciate you guys. This has been a fantastic week. I love Tokyo sessions. I don't know about you guys, but I love Tokyo because sometimes the markets in New York are moving too fast. I don't even have time to talk in New York because there's so much going on. At least we can slow down the markets and we can show you what's going on. And then you use the same analysis in New York. And hopefully it helps you guys out. We're trying everything here possible at SST to help you guys learn. I don't know how else to explain this, guys. The best education is in a live environment where we're trading live. We did a little bit of back testing optimization, but I show you how it leads into developing your charts and things like that. Share the chart? Absolutely, no problem. Let me just, 1 second, I'll share it. And guys, you guys should be excited about trading. Wall Street might go 7 days a week. Think about it. You could be maybe trading on Saturday and Sunday. A lot of you guys that don't go out, if you want to stay home on the weekends, markets might be going 7 days. Wall Street's trying to introduce it. I've never seen that in my life to trade, only crypto, but there could be equities trading 7 days a week, 24 hours. That's fun. Futures, all of that stuff. So you can always make time. If you're working Monday to 5, maybe look to trade on the weekends, make a little bit of money to buy that rotisserie chicken from Walmart. But guys, that's it from me. I really, really do appreciate all of your time. Thank you guys to all the viewers on YouTube. If you guys can hit the like buttons, last night was unbelievable. I think we only had 150 viewers, but there was 150 likes. And that shows me that everyone was engaged last night. Will show me tonight that you guys enjoy what we do here. Let's spread the knowledge. Let's try and get more traders in here learning. It's not a secret, okay? I don't know why people keep this a secret. Share the recipe and let everybody eat. Let's continue learning because we got bigger and better things to do. We're gonna get into stock and options. We're gonna do other things. But look at now, okay? So follow your candles. Look at the size of the rejection wicks. Yes, it did come up green. They rejected it. Again, it opened up. Did it even fill that wick? Remember, the size of the wick matters. It wasn't a short little wick where it could have popped and moved. It came up. They came back down. They brought it closed red. Look at this. It came right back up. Lower high, lower high, lower high. That's that higher time frame supply still pushing the market down. Now it's coming all the way back down. So it might actually come down to that physical double bottom or that full liquidity grab into that big pocket sitting there. And that's where they could really clear the board. Think about all the pending orders, stop losses. These buyers up here, they got their stop loss hanging down here below these wicks. I'm not a market maker, but if I wanted to be, what I would do is, if I had all the liquidity, I would short the shit out of this move, drop it down, take out those wicks, bring it into this pocket, cover my short position, and then with the buyers, maybe bring it back up, and then I buy the market back. And there's your inverted head and shoulder pattern. That's typically what it is. Your inverted head is the release of the liquidity of the sellers covering their position, picking up the big buyers, and reversing the market. That's what a technical inverted head and shoulder pattern is. I know you guys know what it looks like, but do you guys actually know what's happening behind the scenes? That's the things that we want to kind of explain to you. And you see also, maybe it doesn't even come down in there. See the candle, just follow it. It came down. Look at where it stopped, like right at those bodies. Okay, so you got to give it still to the buyers. They're still holding. Like, look, body. See the retest was right exactly at that body. So yeah, that was a big bearish candle that came down, but it still got 60 seconds to close. So we can't always just judge a candle on how it moves until it physically closes. Now look at it. This thing is going to flip into a hammer candle. So it came down, red, right down, still holding the structure of those bodies. This pocket still is in the market. Okay, it hasn't been tapped yet. That maybe we don't even tap this. Maybe it's developing the depth of market at our bigger, higher time frame demand area. Our 4-hour candle could be starting to build a bottom. If you want to scalp these little 5-minute candles, something is developing. It might close again right inside this pocket. Where will it close? Maybe consolidate. Maybe we will actually get a nice bullish breakout after this call. But just, guys, I'm fascinated about following candles. Whether I'm in the trade or not, I follow it to watch and see what's going on, because I can easily turn into a seller, I can easily turn into a buyer, but I want to pick up on clues what they're doing. I want to see exactly. So even if you're on the sidelines and you're still watching, that doesn't mean take your eyes off of what's going on. Just remain patient. You see how it's still consolidating in here? Do we want to start a position in here? If you are, you're speculating. Start a small position. If you want to buy, start small. Start something small, and if it starts and then you see it pull back and go back up, maybe you can build with it, and then when you see it, you're ready to go. You might have that conviction to say, okay, now it's ready. I've been developing with this, but still, sellers are pushing it down. Every time it comes up, look at the highs. It's a lower high, lower high, lower high, lower high. No matter how much it's coming back up, the sellers are still holding it down. You know, this is the dogfight. This is where the sellers and the buyers really battle in here. This is what we call the consolidation zone. You know, it's at a very key level. This is a daily demand area, and you have that huge liquidity sitting in there. I want to see, are they going to really come down and transact in here, or are they going to start to build its way up? But who knows? Maybe this might develop at 11:30, midnight, maybe going into pre-London. Who knows, guys? But it's still bearish, okay? But this could be the development of maybe the reversal. It could only be short term, because remember, we still have supply above us here, supply there, and in your big red box. But this might be a nice little scalp developing to break through the trend line and get its way up there. Okay, and if you look from the bottom, it is building a higher low, higher low, higher low, and you still have that big green demand box right in there, and there's the heat sitting there. So you see that nice transaction. Okay, there was a big buyer that entered the market. Again, they're trying to push it down. Let's see if we pick up again, and then breaking out of here, and then we recover. See our trap buyers? They're up here. These wicks, they're trapped. They're buyers up there. They're trapped. They're still in the market. Maybe we need to come back and recover them where they're at break even, and then we break to a new high. But we don't want to lose like this depth of market. But if it does, think about a double bottom. Okay, one bottom already established, coming down. It came down red but went back up. If it comes back down, physical double bottom is there. Then will we pick up a good solid order and come back up and do something like that, or that liquidity grab right in there. Okay, and then also, if it does close red below there, think about this as well. Okay, that's why I like to follow candle by candle, because that is not 100% guaranteed that move. What happens if it does this? It comes up, back down, and then we trade into there. But guys, manipulation, spook moves, spoof. If you see like the red coming down here, and then all of a sudden this big order disappears, you see it just before the market even comes down there, you'll see it move, and then it disappears. Then 23.48 turns into 19 bids, and then they lower it. So then they're pulling their bids, and then what that does is maybe it opens this area to continue to sell down into there. Then if it closes down there, this area, the box, I flip red, and then maybe it's going to continue selling, and then it comes back up, and then this heat will turn into offers, and it comes back up there and reject it, and then they keep taking the market down. Okay, there's you have to acknowledge that as well. Don't just get glued on to thinking that this is automatically where the buyers are, because they are there. But when the market comes down, a market maker can cancel. These are pending orders, can easily be canceled. Just like you, when you go into the market with a pending order, you can cancel it at any time. If you see the market coming down and you don't like it, it's coming down, you can cancel it and you can buy back in a little lower. You can come in with a new pending order. The market can do the same thing. Okay, so just understand that. You got to understand that just because it's showing green heat there, that doesn't mean that that's exactly where the buyers are. You got to think that manipulation, things can happen in the markets. Okay, but you see now, just overall, we're continuing to just trade again in the box. We haven't made a new higher high yet, and we haven't really created any lows. The red volume hasn't closed below, so this is not a good time to be trading. When you see price action like this is when you stay out of the market. This is when you wait for bigger development. You wait for a clue. You see, is it going to be a big red candle come down here, pick up this, and come up with a wick? And it's one of those FU candles that we talk about. I don't want to swear here, but you guys know what I mean. It's the FU candle that will it will come down here, red, catch a huge wick, come back up, maybe close like a hammer, then get here, and then it's gone. And then we just said FU to all the sellers, and the buyers are in control. Okay, look for clues. Clues. Put the pieces of the puzzle together. Now we got a nice ignited green candle. Okay, let's follow this. So it came down, kind of in our green box, still in there, picked up that liquidity, coming right back up, traded right near equal high, coming down. This is a bullish pin bar, so it's not aggressively bullish. There's still a nice bullish volume. We opened right here, and now we're coming right back up. We broke a high, but we still have this big high. Maybe we'll get it on this bar now. 11:15, so this is a new 15-minute candle. If you want to quickly take a peek at the 15, this is what's building. So our 15 came down, higher low, came up. That's about 50%. We came down. That was a big red candle that came down. We saw it on the 5s. Then it quickly got rejected, came back up. We got a new kind of high on the 15-minute candle, closed with a red body, but we opened ignited green right here. So ignited green, we just tapped right into our, the 15 could drive. And then how high could it drive up to? Right up there. You see that 15-minute wick to 2,332. 2,333 right up there. Let's see how it looks on the 5s. Now if you're following the 5s, that was an impulse breakout. Okay, they impulsively broke it out, but it's still lower than there. They rejected it, but still it's an ignited green candle. It could come down, pick up some bids, and then again they're asking to trade back near the high. There's still 3 minutes and 30 seconds left on this candle. Will we get that finishing move where it will close green near the high above that daily, and then maybe if there is a pullback, measure 50% of the volume of this big candle? If it will in fact finish strong, it could just come right up there and they reject it back down, and we're coming back down, and then this is a candle that is very critical in the market right now because it's opening of a 15-minute. So you see how it came down, but remember the ignited bottom. Okay, that's a strong clue that it opened, and look at how they're asking to trade again near the high. So the depth of market is building. Let's say maybe we can get up to that VWAP and trade up there. Still a lot of negative cumulative volume delta, but you see how maybe we figured the first bottom of the market. Okay, and then if you're scalping, like any one of these candles, if you had your stop loss down in here, you're in profit right now. Do you know what I mean? Figure out these demand zones, and it will really elevate your trading, and you'll trade with more confidence, guys. I would love to continue to go on this call with you guys, but that Kenny, Ronnie, the machine, the robot, yeah, I love breaking the markets down. But again, guys, if you're going to continue trading, look at it. It's trading right at our trend line. See the trend line? Right at that daily level. So it could break, could pull back, identify where's 50% of that candle. And remember, it's still, this is developing like a wick on the 4-hour. Okay, see the 4-hour candle? It came all the way down there, and now it's coming all the way back up. So this 4-hour candle has an hour and 41 minutes. Who knows? Maybe it will continue. The buyers will bring it up. Where will this 4-hour candle close? Will it close near the yellow line? Will it close back up here? This could be possible reversal for gold in the market developing. But this candle is a critical candle. Let's wait for it to close. I'll stay with you guys 90 more seconds. If you guys can hit the likes, whoever's left on YouTube, I'll stay and we'll watch this candle close. Anybody in a buy? Is anybody speculating a buy here? Because we're at a critical area here. But you see how 50% kind of above here, kind of held of that candle? And remember, this is a tough move for buyers to do this because there's so much selling pressure behind. So this is where if you get into like a situation like this in a buy, kind of like, go stop loss, bring it to break even, or kind of trail it behind a little bit. But let's see the close. Okay, so let's dial in. Let's zoom in here. Let's see how they close this. Look at this full. Okay, so first thing I'm looking at is where they close. Will it close near the high? Will they reject it right down? The last 30 seconds, it's kind of like in basketball. You got your 24-second shot clock. It's kind of winding down. You're going to make a move. This is where momentum kicks in. Look at tweezer top highs. Okay, let's just look at that previous high wick. Tweezer top highs. Okay, equal highs right up there. Where's 50% of this green candle? Open, close. Half of it is right around here. Okay, so I'm getting ready in case there's a pullback to 50%, approximately right there. Here it is. Okay, look at how they opened it right at the equal high. They're bringing it down red now. So let's see if we catch a quick wick and pop out of here, and then we can drive right up to this next red line. Okay, so it's small doji candle, came down red, still a higher low. Okay, now it's coming right back up. There's the test. Let's see if we get the pop and the breakout. Nope, they rejected it. Again, picked up liquidity. Let's see now if we get our drive. Remember the 15-minute candle. There it goes. 15 could continue to fill. So if you're in a buy, follow your 15. Here's your 5 breaking. Did it hold? Now the yellow line. This is where now I draw my zone. Okay, right away. The previous wick to the yellow line, there's my new zone. Okay, so, and then 50%. So if we do pull back, I want to see if this area now will be kind of turning into a support area. So we broke out, it did make a higher high. That's important. A higher high is important in order to continue an uptrend. You have to make a new higher high regardless. Okay, so that's a piece of the puzzle is checked off. Unfortunately, the higher time frame supply is pushing it down. Here it comes down red. Now look at where my red line is. That was about approximately 50% of the bullish candle right there at the trend line. Let's see if it can pick up a wick here. Are we going to find a bid in here? Are they going to hold this bullish candle still up here? If not, the sellers will sell deep down into this green candle, and if they kind of engulf it, then unfortunately the sellers might bring it down. Okay, this was our first 5-minute candle that closed above. It came up. Now we're coming back down. Will it get a wick? See these areas that were yellow lines, previous areas of resistance turning into support. See the depth of market? Still that 187 is still sitting right there, that big order. They kind of haven't lifted it up to kind of prop up or secure or to strengthen the depth of market. It's still sitting there. So let's see. The sellers now sold it down. Can we see some buyers start to ask to trade up here? Let's see. Maybe we have to wait for this full body candle to close. Where will it close? So yes, it did come down red. That sucks, but we're still holding a little bit of fair value gap in that body of the candle. Maybe this will continue to come back up. Where will it close? It's at the critical breaking point, like right here. This is the critical first candle that closed above the trend line, and it did come down red, 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 but now look at buyers are flipping it right back up. So that's why it's important to know where to locate your stop loss. Did we break below 50%? Yeah, a little bit. But that's that zone I'm talking about. A little bit above, a little bit below in an individual candle. You can see it more clearly when you're doing the bigger candles, the daily, the 4 hours. It's not so clear on the 5 minutes. But what happens now, 2 more minutes to go, if it closes near the high and we build off of here, and then our next green candle is another strong green candle, maybe we're following this 15-minute candle. Where will this 15-minute candle close? See how it's approaching that yellow daily line? Will the 15-minute volume close above that daily, and will the 15-minute trend continue to build, or will they reject it and then the next 15-minute candle is going to be bearish coming back down? Remember, the 15-minute candles can make a double bottom. Okay, so you see now how it's an inverted hammer. We came down, impulsively broke out, coming back down. Maybe we come back down. Maybe it needs to make a physical double bottom on the 15s, and then start to come back up with more momentum later tonight. But I judge a candle when it closes. So we still have 6 more minutes to go on this 15. It's still got that ignited body still building. The 5 minutes, this is where I can kind of dissect it, and this one's going to close in 60 seconds, 1 more minute, and I'll judge it when it closes. If it comes back and trades in my consolidated box, then we're right back consolidating. And then we got to continue to build. We got to continue build momentum. Then to me, that was a fake out. Okay, they kind of closed it up there, kind of faked out, and then bringing it right back down. But we can still build the bottom. That doesn't mean that that's it. It's done. It could be bearish, but it's got to build. Okay, so guys, I can stay all night with you guys and dissect candle by candle. Let's finish this one off, 30 seconds, and let's see where this closes. But Lillian, have a good night. I hope you enjoyed tonight's call. Okay, so it's still building here. Again, the sellers selling it down, buyers asking to trade up here, but it's still continue to push it down. Again, the little consolidation, we're consolidating right in this area. Here's the candle close. Okay, so it's closing with a red body. We know it broke a higher high. We know it's got a higher low. Look at what they do. They gap it down a little bit. Okay, so what we have to do now is catch a quick bid. We got to catch a quick wick and turn green quickly. Otherwise, see my green zone? I'm going to unfortunately have to flip it red for the time being because we're below it. So I need to see now a quick bid in order to respect that higher low right now. Like I got to see some asking going up here at 23.53. Okay, there it is. Nice little ask. Okay, now can they build off of this? Can this be kind of like a 3-bar play where it goes up green, red, green, and we're breaking out of here? But you see how everything is concentrated right at our yellow line? So we're flirting with that higher time frame level. Well, this is a key level that could build, and we continue to break out and squeeze some sellers here. Let's see if it works out. But it could very well come back down red, red, red and trade back down into here. But if it does, now I extend my green box into the future. I just continue the boxes that I've created and just continue stretching these things across. I might clean up my red lines because it could get really messy with all of these lines. But see that, how it just came down red and it flipped back green. Okay, so now we're getting volatility. That's what volatility is, where it came red, flipped green, back down red. That's volatility within this candle. So you see sharp rejections. Again, it came up lower high. Now they're bringing it back down. Will it take out that low? Okay, if it takes out that low, then it wants to come back down and transact down where this big bullish candle opened. So there it is. Will it be an equal low? Will it take out that low? Will it create a higher low? These are all questions that you got to watch for. It's in order to keep a trend moving. I know it's tedious and it sucks when you're in a trade, but that's why when you get into a trade, you appropriately place your stop loss below structure and then you watch the trade play out. There's nothing you can do when you're in a trade, whether you're in a buy or sell. You kind of got to let the trade play out. Hopefully you got the correct direction. But also in buys, guys, that's why countering when you're buying, like let's say you bought anywhere of these wicks, let's say you bought that candle, let's say you bought any one of these bodies, when it trades up to like a key critical level, that yellow line, that might be a target for you to accept some profit. I don't know, like I'm saying there was buyers in that candle, there was buyers here. and it came up there. That's like a 25 pip move in Tokyo session. Not bad, but maybe you got to get in the habit of starting to secure a little bit at these yellow lines, at these white lines. These are higher time frame. Because it's not just going to go up forever. We got to get out of the habit thinking that it's going to be a moonshot. It happens, but not all the time. Okay, I know a lot of traders that think that this thing is going to go all the way up here. Okay, it came to that kind of daily level. Yes, we did trade above it, but now they're pushing it right back down. It could very well continue to build, and then we come right back up and close above there. We flip it, and then we're off. Then we're going to trade to this red line, and then hopefully get up to that next hourly white line, 23.35. And then again, when it gets up there, you got a decision to make. If you're in a buy, because you got to do something. Because look at here, green candle came up, and then they rejected it back down. What happens if we trade in that same location, and then those same sellers push it right back down? Like, you don't want to piss away on maybe another 25, 30 pips up there. This total trade could be 50 pips up there if you get it. But just continue to follow this. So it came down, but it's going back up. Where will it close? Maybe it's going to trade sideways a little bit. I can see this maybe potentially continue to break out. But you got to follow the 15 and the 30-minute candles. Here's the 15. Is the 15, it's going to close in 43 seconds. Will it have enough juice to close above that yellow critical daily line? Take a look at your 30-minute candle. Your 30 has kind of got some indecision. It came down red, 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 came back up green. Will the 30 see how critical on all time frames this yellow line is for the 30, for the hourly? Look at the hourly volume. It's right at that critical daily line. Never mind the 5 minutes, but this is a real critical area. So let's see how they're going to close in the next 15 seconds. It's nice. Again, hammer candle maybe coming up. Like, this is how you will speed up your learning. I'm telling you guys. Look at this. Okay, look at the close. Hammer candle. Okay, so we closed high, but we didn't take out that previous high. Now I flip my red box green again. Okay, just continue going through the motions. And again, a new, now what time is it? 11:30. New 30-minute momentum. Will they continue to take it up here and push? We've got rejection wick, rejection wick. We close with volume above that yellow daily line, the green box. This is where we could potentially fill that wick and pop a little higher, maybe fill up to there. So if you're in a buy, just measuring from the top of the wick to the next red line, additional pips to your profit, that's a 15 pip imbalance fill. Just from that wick to that red line, that's an additional 15 pips. Even if you're just buying this candle alone, it could come up to maybe 15 pips, come up there, catch a wick, and get rejected back down. So, but this is the higher time frame. Like, look at your 30. Okay, your 30 looks strong and could maybe possibly fill up to those 30-minute bodies. 15 did what we wanted it to do, close above that yellow line. It's kind of got pulled back, short wick. It's popping. The 15 has popped. Now can we drive? And maybe that 5 minute can maybe fill a little bit of this imbalance. And it could possibly trade near that VWAP. That's what it's attracted to trade up to. But measuring everything, you got a higher high. Okay, it did develop the higher high, came back down, got rejected. So will the buyers continue to ask back up there, or will it rotate back down? So much things, guys. But that's why sometimes trading in New York, that move could have already been filled right up there. That's why I like to trade New York volume. New York volume moves and fills properly and things like that. So, but Tokyo session, this is like it's a good bullish move, but you see how long it's kind of taking to develop? In New York, bang, 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 we would have filled that candle up, but just learn that volume trades in different sessions. This is Tokyo session, but it's still moving real nice, still continuing to make higher highs, higher lows. No structure has really been broken yet, and it's still continuing to drive. But play it out, guys. See what happens. I'm going to go to bed. Got an early morning tomorrow. I will see you guys tomorrow night. Okay, so thank you guys for the participation tonight. It was excellent. I love it, guys. I want you guys to be more interactive, more engaged, ask questions, and let's learn together, and let's have some fun in the next calls. Okay, have a good night, everyone, and have a great day in the markets tomorrow. Guys, if you have to practice tomorrow, take a day off of trading, like buying and selling with your real account, focus on just one day. What Ron was talking about. Focus on one security. Focus on doing a top-down analysis, higher time frame. Focus on 50% of candles. Focus on rejection candles. Focus on higher highs, higher lows, or lower highs and lower lows. Figure out what the trend is. If it's a choppy consolidated session, trap that volume and maybe just be patient and wait for the move. Don't force any trades. Just see if you can do that. And tomorrow might be a fantastic day to learn in the markets, and then you can prepare yourself for next week using something new. But sometimes when you're just focused on buying and selling, you're going to forget everything I talked about on tonight's call. You're too focused on buying and selling. You might be in drawdown and you're not even looking at 50% of candles. You're not looking at anything we talked about in the last 3 hours. You're just focused on whether you're in profit. Sometimes just take one day off. Guys, the markets are going nowhere. The markets are here all day, every day. They're here for us. Just maybe take one day to learn, to just sit back, watch some candles, and then see if it's respecting 50%. Follow these candles, follow the wicks, see if you see what a liquidity grab is live, and really focus on it, and then I guarantee you'll learn so much more, and then you'll be so excited to get right back into the markets and use the knowledge that you acquired and put it to work. Okay, so everyone, thank you, have a good night. I appreciate everyone. God bless, guys. Let's get these pips together. Let's work hard. And thank you guys for everyone for liking, subscribing to our YouTube channel. I truly do appreciate you guys. It's mutual respect. Thank you, guys. And everyone on Zoom, have fun with Shahab and Dave tomorrow. And trade markets. There's going to be a little bit of volatility at 8:30 tomorrow morning. So please trade safe. And have a great day, guys. Thank you guys so much. Fantastic call.
Welcome to Stock Sniper Trading. Ready to transform your trading? Discover the perfect Stock Sniper trading plan for you. At Stock Sniper Trading, we execute trades in real time on live sessions with proven strategies. Let's take you through our membership plans. Live trading and Scalper Pro signals. Our monthly plan starts from $49.99 USD plus tax. Our 3-month plan starts from $149.99 USD plus tax. Our yearly plan starts from $549.99 USD plus tax. Our lifetime plan starts from $999.99 USD plus tax. Stock Sniper Trading signals. SST monthly signals at $29.99 USD plus tax. SST 3-month signals at $89.99 USD plus tax. SST yearly signals at $249.99 USD plus tax. For more details on our one-on-one trading and consulting and subscription plans, kindly visit StockSniperTrading.com.
Hey guys, good morning. Welcome to the live session of Stock Sniper Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.